Shake my hand, everybody. Good afternoon, 365. Shake my hand. We are live. Can I quickly, while I do some stuff in the background, can I just quickly get a mic check? Can I get a mic check, please? Yeah, just let me know if you can hear me loud and clear. I would thoroughly appreciate that. Thank you so much for joining me this afternoon as we scan the markets. I mean, there's a lot of stuff to talk about. But this is one of those war rooms where I actually want to take it nice and slow. So it might be at the expense of other charts. It might mean we look at less charts than usual. But we really there's something I personally today I'm here for me. Normally I'm here for you, and I love being here for you. But today I am here for me. There's just stuff I need to kind of like figure out, which I thought I'd figure out by myself yesterday when I was working through some stuff. But because NFP was Friday, there were a lot of things going on. So just quickly, mic check, everybody. If you can hear me loud and clear, please do let me know. If you can hear me loud and clearly, please definitely let me know. Then we can start. So if I'm coming across on the YouTube clearly there and you are watching, I just need one person to let me know that the audio is good. And we are going to start. So we're going to do a basic market scan like we normally do. So let me just move my tabs in the right direction. And then after we do a basic market scan, I'm pretty sure it's going to lead into talking to you guys about a lot of fundamentals at play. And then after that, I truly believe in my heart of hearts, we will then be ready to kind of like dive deep into some charts. The charts that I want to look at today, thank you so much, Alvin. The charts that I want to look into today are painfully clear, all right? So we're going to look at the majors, right? We give you some once in a while, and more so now than ever, right? Today, I really want to focus on our majors, make sure that our majors are thoroughly covered, that we have no surprises inside our majors. For those of you who don't know what the major FX pairs are, it's Euro USD, right? And I'm calling them out in the way that they rank in volume. So most liquid, most traded. Euro USD is at the top, USDJPY number 2, number 3 is pound USD, and then number 4 USD Swiss franc. And then after that, which in my humble opinion should also be majors, and a lot of people argue that these also should be majors. They are not majors, they are actually called commodity currency pairs, and that's because they embark in a lot of everyday trading, like goods trading. So that's a good. Thank you so much, Thomas. Thank you, brother. I think commodity trades are generally a very good pairs to look at as well. So USDCAD for oil, obviously, NZDUSD and AUDUSD. So those are kind of like the charts that I'm going to zone into at the very beginning, and then if there's time, I'll then get into like a couple of pairs for this particular war room. So like real quick, let's have a look at what's going on. And I think it's nice to see the futures market pre-market, because it's going to be the first thing to open tonight being Sunday, and it's going to work its way up until the New York opening. As you can tell, we are down. While we're down, it's still the same stuff, right? Ukraine war. This headline, those of you who attend war rooms regularly, I told you it's going to be a long-term bloodshed, right? Dow shares another 180 points, but that's not it. The bigger part is this is the 4th straight week Dow is down, right? So your US indices blood. I mean, I see some of you like buying retracements, right? Good for you. If you're making money, man, right? Remember, my job is to provide market education. That's really what I'm doing in these war rooms, in my morning streams. My job is ready to look cool. And for me, market education is simply to teach people how banks move. Now, they're retail trading strategies and they're smart money concepts, right? Basically, at 365, we deal with smart money concepts. Now, I've been very clear with you for a very long time, an audaciously long time, that smart money is selling in the stock market, and that means your indices, your NASDAQ, your Dow, your SP 500, we can buy the retracements, but for the most part, we are selling. I've said the same thing about crypto, all right? And if you go back to the charts and you go back to the war rooms, you will see that you would have made more money going down with the markets than fighting the markets going up, right? And this is like almost a full month now into this kind of stuff. The down blood spill does not start because of the war. Let's also be very clear about that. The war is a final catalyst to a downtrend that started in December, November last year. All right. So there are bigger problems in the world, including the war. Right. So Ukraine says US considers more Russian sanctions. Right, second attempt at ceasefire failed. So these guys have been trying to create a ceasefire yesterday and today. They created what they call a humanitarian corridor. Wherever they are fighting, this place that's with an M, Mariupol, there's about 200,000 people stuck there, citizens in that battlefield, and then there's another 20,000 people stuck somewhere else. And the agreement was, well, can we quickly remove our people and then we continue fighting, right? Pretty much cavemen, a Viking mentality. And every time there's a green light for that, fighting continues. So Russia, Ukraine, and guys, if this doesn't get resolved by midnight tonight, those of you who have preemptively opened Euro USD buys, Pound USD buys, be very careful that markets are going to gap against you. What I mean by that is markets are not going to gap up with you because you're already buying, but markets could gap lower if this is going to be the sentiment that the Asian markets are going to open to, right? So just be mindful of that. I did warn you guys that we are now in crucial zones, Euro demand zones, especially Euro USD is in a demand zone, but that does not necessarily necessitate that we should just run blindly and just start to buy, right? Market sentiment has been the theme since I think the 24th or the 14th of February. I can't even remember, right? So I think that's just about it, right? In the bigger scheme of things. So I'm going to close this tab right now, right? But CNBC, basically everything is down. Oil closed strong last week. Gold did fairly okay, right? 1974 is actually brilliant. Let me give it its flowers. Silver adjusting quite well. Palladium, I think I showed you guys, I'm still holding my platinum trade. I bought platinum on the 15th of December, give or take, right? And this wasn't even my trade idea, right? So I don't know if these guys know this, but there was a student, Alvin, spoke to me about platinum at some particular point in time, but also Mr. Albanus from Kenya, during the one-on-ones last year, brought up platinum with Jason, right? So I took the trade seriously, set and forget, and price came back for me. Took like a long time to get triggered, but did get triggered. And now platinum is doing well. Not in palladium. I wish I was. Closed my copper trades last year. Thoroughly regret that. If you're new, by the way, I'm a swing trader, so I enter with a medium to long-term hold because I believe that's how the best money is made in the markets, right? That's my personal belief. I'm a swing trader, but I have been doing a bit of coaching also for intraday trades, right? So markets, are fairly okay. Now look at this. Crypto is just blood red. And this is not the projection we had for crypto last year, ladies and gentlemen. I really want to paint a good picture today. I want everything to be clear. This will probably be one of the few war rooms where I took all the time in the world to let you know what I believe is happening, is about to happen, right? Because what happened was last year we were expecting a strong bullish crypto rally into January, February, March, April, up until June. All right, that was the plan because there was Fed tapering, which ends very soon in the next few days, right? And really, there was nothing at all that could stop the flow of crypto bullishness until we started to see some serious cracks in the plans of, number one, FOMC, number two, inflation. The bigger problem is crypto, since COVID, ended up coupling up with the equities market, right? So basically, cryptocurrencies move in a very familiar way as the equities market, the stock market, and as you know, stock markets have been down, crypto has soon followed, right? So we'll cover that stuff quite extensively, right? Now let's go into some better detail. Now, job gains remain strong, good. We had NFP on Friday. Now, I covered NFP extensively every day at 9 a.m. It was kind of like the trade idea of the week. So I spent a lot of time focusing on NFP. Now, I say to you guys once again, on Wednesday, there's something called ADP. It's that simple. You check out ADP. You don't copy what ADP is saying, but you rationalize what ADP said. I then told you guys that ADP did not only beat their forecast, but they came back to say they have adjusted their wrong focus in the previous month, meaning some interns somewhere, made a mistake or whatever the excuses out there, right? But it was said and it was adjusted. Then I said because of that, NFP, all NFP has to do is to simply beat its focus of 407, so maybe 408, because anything above 407 is already bullish since ADP found 475. NFP came back even more bullish, 678, and I explained all that kind of stuff to you. I explained the reasons why there was a complete, the jobless claims are going down. Powell, the only thing that Powell is doing well and can be held to be very proud of right now is actually the labor market, right? Otherwise, let's not lie, the economy, the American economy is in deep trouble, which means the global economy is also in deep trouble, right? The unemployment rate, I told you guys about this, it's gonna have to drop. It has to drop, right? So we're at 39, now we're on 3.8%. This I found hilariously interesting. Remember, these guys are scared of inflation, right? Hello? Inflation, right? We've been talking about this. Inflation. So now I say to you guys that average hourly earnings tracks basically, actually, let's just read it. Let's not even go with Leroy's thing. Change in price, businesses pay for labor, right? So every month, if there is an increment in wages, right, we'll see it here. This has been going up. In the previous NFP in February, it was 0.5. It went up to 0.7. In the previous month, when we're tracking NFP for December, the results came out in January. The focus was 0.4. It came out as 0.6. So between December, January, February, right, we're 0.6, 0.7. And all of a sudden, a week before interest rate, a week before the end of tapering, a week before we finish printing, a week before the final CPI report, which drops this coming Thursday, we are on a flat. Not a single business in the whole of the United States increased their wages. Right? I tell you guys that this is their market, their data. They have to do this to get their votes to move money the way that they want to move money. It is an integral part of monetary policy. What I need you to do as quickly as possible, and by quickly I mean by the end of the year, be realistic, right? What I'm doing here every day is teaching you guys 9 years of knowledge and information, and I keep learning and growing. So quickly is not something that you're going to learn overnight, but quickly is just focus on being able to identify when they're taking us for a joke, when they're trying to fool us, or when they're simply doing their part to manipulate the markets because they need to get stuff right. And this is all important, right? This is absolutely important, fundamentally because there is a lot on the line. So what do I mean? Remember, we have inflation. Now, inflation on year is 7%, right? As in the inflation rate is 7, it's high. It's supposed to be 2%. I feel like I've done this before. I don't know that I did it for you guys or in the senior traders program. I don't know, but I know I've drawn something similar, but we'll do it again. Now, for inflation to go up, it means prices of everyday living are going up. If you're in South Africa right now, very soon, when you need to pour fuel at the garage, you must sell your kidney. All right. Fuel has gone up in our country, right, at 21 rands, blah, blah, blah. And if you're in Kenya, you just find it in the small things, in price of bread, everyday living, cooking oil, right, your basic commodities. That's a sign that inflation is going up. Now, when inflation goes up, the people working who already have jobs, let's talk about the people who already have jobs. This is linked to the Forex market, so I will take my time and explain it. Now, the price here for their wages has to go up to compete with inflation. How do we see this? In South Africa, if you read the labor studies, there are 1,000 protests in South Africa today, every single day, around service delivery. It could be xenophobia stuff, remove the foreigners, where are the jobs, where's the water, municipality. There are 1,000, this is literally my field. This is literally, I promise you this, but it is there on Google. Hey, Ambassador, not a problem, brother. Right? So and you feel free to not watch the War Room live if you arrive late. So you can actually just rewind, and then you'll just be like 10 minutes behind the rest of us so that you don't miss out on the intro if you think it's important. Right? So wages need to go up. I'm bringing up protests because that's going to be a thing of 2022. Remember this, 2022 in America, in South Africa, in your country, as long as you're not in Zimbabwe where there's a dictatorship system where they'll shoot you for protesting. In 2022 to 2023, we're going to see a lot of social labor unrest on the streets. I promise you this. Remember, before I am an economist and a trader, I'm a social scientist, right? So this is literally my first field of expertise before I move to the markets. This is a guaranteed stuff. And it's because the people here with jobs are going to be protesting for higher wages through institutions like trade unions. So you're going to see it's going to be the year of trade unions again. It's coming. It's coming. As soon as technical recession sets into your local country. Now, they guys want to push wages up. They want to push wages up to compete with inflation. The problem is the interest rate of a country, let's talk about America right now, is so flat. It's flat because of COVID. When COVID came, FOMC had to print a lot of money, right, to make up. As I've told you this over and over again. Now they have to fix this equation. And Powell, guys, here's the truth of the matter. Powell messed up. Powell, the FOMC of America, messed up by delaying in increasing interest rate, because Powell kept saying this annoying word, which I warned against last year in October, November. He kept saying inflation is transitory. I don't think I spelled it right. Transitory means it's going to pass. It is a short-term side effect in our economy. Don't worry, it's transitory. We will have high inflation, but it's going to come back down. It's transitory. And so there's no need for me to jump the gun and start increasing the interest rate, right? And Powell last year was on for election. There's no one who can get elected better than the same person who prints money every day for you to stay home and not worry about a job, because you're going to get an employment check every week. In South Africa, there's a monthly grant of 300 rands. In America, it was an employment check, and some of them depended. Every week, someone gets $600, or depending on your situation, almost 1,200 US dollars. That's different from getting 300 rand a month, right? His election ran on this kind of stuff. So he was elected, good for Powell. The problem is Powell thought this year was a beautiful year to start increasing the interest rate. And that plan made sense. Yes, he's behind, but at least he's going to do it. What he didn't factor in, which I don't think anyone would factor in, was that one day a big country like Russia would be threatened by a tiny country like Ukraine because of the NATO cloud behind Ukraine, or at least Ukraine joining NATO, which caused a war. Powell didn't see this coming. No one did. Now, because we have a war, you can't just start increasing the interest rate and catch up with your mistake of 2020. Because remember, if America, which is part of NATO, acts any type of way aggressively into the war and does more than donating missiles, more than sanctions, and gets involved, American army is going to need a lot of cash real quick, because war is a cash business, which means you can't keep increasing the interest rate while having your money machine printing. Powell is screwed. So immediately in February, the Fed started to backpedal just a little bit. Everybody, including crypto maniacs, listen very carefully. I showed you guys. Remember, I came here. I'll show you now. And take my time today because there's a lot on my mind, and I can't sleep sometimes. There's just so much turning. What's it called? Fed monitoring tool. Monitoring tool. Surely that's all I have to kind of like type on Google. Is it not this? Okay, if I can't find it, I'll move on. I just want to waste time. I don't want to waste time. Fed monitoring tools, investing.com. I might have to disappoint you guys if I can't find it. Ah, man. Okay, it's somewhere here. Look, I'll have to look and post. But anyways, it was there in the previous war room video, or I'll just keep typing the right keywords, until it pops up. It was there in the last war room that I did. For those of you who religiously follow the war rooms, where I showed you guys that the first time I taught you about this, it's just a speculative tool of institutions. Most people, 75%, wanted the interest rate hike on the 16th of March, 10 days from now. Everybody thought we were going to go 50% basis point because war wasn't even a thing when that happened. As soon as the war came, if you check that tool that I was looking for, everybody is now thinking 0.25 because the Fed has said that. Right, the Fed has said, look, man, given the amount of uncertainty we don't know about war, we would much rather increase the interest rate steady. Now, guys, think about this once again. We flattened the interest rate, right, because of COVID in 2020. Brought it down to zero. South Africa did the same thing. Everyone did the same thing. Inflation is currently at 7%. How are you going to catch up with that? Well, if you increase the interest rate hike to 0.25 at this meeting, and then the next meeting is in the next financial quarter, and you go 0.25, all you have is an increment of 1% versus inflation of 7%. That's a big problem. The thing that really shocked me the most was Powell said, and I brought this up in one of my morning London session stuff, that we're going to look at the 2004 module of how we increased interest rate recovering from the tech boom. All right, now I showed the people who attended that real quick. Well, how many? I was very interested, like how many Fed rate hikes happened in 2004, and it turns out there were 17. They raised the interest rate from 1% to 5.25% in a 2-year period from 2004 to 2006. I was like, geez, that's crazy. That would be good for the market. The problem was they were doing this to catch up like they have to do now. So let's look at the charts. And I did this already with the other group. I apologize if it's the second time you've seen this, but my introduction is almost done. I'm going to quickly go straight to the monthly time frame. I'm going to quickly look at it. This is the 17 interest rate hikes from 2004. You see that? See that there? That's crazy. From 2004 to 2006. And what we know about interest rate hikes is that, well, they strengthen the currency. So if you increase the interest rate hike, what you get is a bullish currency. Well, that's interesting because between 2004 and 2006, even though they gave the market 0.25% steady interest rate hikes at every single meeting for 2 years, the dollar still fell. Why? Because supply and demand, right? 365 traders, you can already see your market phases, your structure reading, right? You can see a swing high, swing low, with a supply at the top and price was looking for a major turning point, not just a demand, a classic module 1 major turning point demand. So market still fell even though we got the interest rate hikes. So now everyone's like, wait a minute, what did he mean by that? Or not everyone. I'm one of those people thinking. And so on Friday, I finally closed all my longs on the dollar. Granted, maybe I was a bit panicky. Maybe, at the end of the day, I simply followed my rules. Now, the picture is there, live account, branding, everything is there for you guys to go review on my socials, on the 365 page. But the bigger point is I had to close because after such a good jobs report on Friday, markets made contact with a monthly supply. Right. Now, in terms of structure, I know for a fact that dollar could still push up. I know for a fact that, safe haven flows because of the war are still there. So I haven't given up on my dollar bull thesis. I just don't want to lose all this beautiful money I've been holding from last year. And what I say to you guys, those of you who saw the social media post, was markets are slightly ahead of time. Why? The last Fed interest rate hike out of COVID was the 16th of June, when the FOMC gave us that first rate hike and then said we're going to taper in November. 16th of June to me is an important time in the markets, and you'll see it across all your charts. Risky assets fall, and then risk on or risk off assets go up, like the dollar. Basically, all charts follow this pattern. And so I know for a fact that it's going to be a take year profit. Banks think in 3 months, in a 1-year take profit span, in a 10-year plan. So the take profit for institutional buys here is supposed to be in June. So I thought I would hold my trades all the way in June. Now, what I like about the fact that is markets are not, are not random, they're extremely predictable. And the TradeView platform is almost designed that way. This is the month of June, right? This dotted line that I just put here, right? I don't know if you guys can see it. let's quickly make it a little bit thicker for you. There we go. Those dots going there. You can see there, that's the 1st of June. It is not wild to assume that markets would have traded, right, within the next 3 months, right? Little bit up, come back down here, maybe, right, give or take. Look for a good level, right? Somewhere in there, make your way up there, right? So we already are inside this monthly supply structure, but on the way out of it, right? So by June, the take-year profit would have thing. So technically speaking, I should have held on, but I don't trust what I'm seeing. All right, number one. Number two, I'm very happy to find a lower buy somewhere down here, which we'll talk about later on today when we're now mapping out signals. I'm happy to come wait down here and get triggered afresh and then hold one buy than for me to lose the value of 3 swing trades that I've held for about 9 to 10 months. All right, so that's why I exited out of those longs. Half the senior traders exited on Friday afternoon when I got back from therapy. I think half took partial profits, and then I think the rest tightened their stop losses. So everyone is doing their own thing, right? But I'm completely out, and anyways, I need more cash than positions right now because I'll be investing for the first time this year back into the Wealth in 3 Years program sometime Monday, Tuesday, tomorrow. So I wanted to get out of these risky positions. Right, so a lot of things have happened, and that's all just packed into that NFP. So just don't forget that. Now we catch up with what's going on. So job gains big. Your indices close lower. I'll touch on NASDAQ if there's time, but I've told you guys what to do. And NASDAQ will just continuously, I promise you, it'll continuously disappoint people with a very short-term basis. Unless if you're risking your account and you're very good with short-term trades. Be very careful with NASDAQ and all that kind of stuff, or rather be very careful with going against the grain. This Bitcoin setup is exactly what happened with NFP on Friday with Pound USD, and I posted this on my social media at 1 o'clock just to tell you guys one last time that NFP is going to be positive, and here's a good trade idea: sell Pound USD. This is exactly what happened. This is Bitcoin, right? But this one, this is H4, but on the 1 hour time frame on Pound USD on Friday at about 1 p.m. before I left the screen, there was an hourly demand, and price arrived at an hourly demand and created a bearish engulfing pattern. So an opposing zone against opposing zone, and you can only guess what that means, right? It means wherever money is coming from, which is downward, sell pressure, right? It's going to get taken out. And that was the only NFP trade I set and forget it, actually put a sell stop and then left for the afternoon, and I came back in very good profits, right? So markets tore through that, but we'll have a look at it. What I actually wanted to show you on the charts was, what did I want to show you? I forgot it. What was I talking about before all of this? Jobs remain, indices, talking about NASDAQ, right? Just be very careful about how you play, your account, right? Be very careful that by the time markets stabilize, you're not heartbroken and you don't have bad trading psychology. You're not traumatized. You've lost all your capital because you're impulsive, because someone told you that the markets are going to end and you're trading like it's your last day on earth. Be very careful, right? So markets took out a supply here. I think I told you about that a long time ago, and then created this here, which I hate. So I personally didn't trade it, right? But it was there nonetheless. And markets are now pushing back down to what was starting to look and feel like a value-based recovery. Be very careful about this. So it got me thinking, where and when have I seen this before in indices and in the markets, right? So yesterday I did like a full big review, and I'm not even done. I was like halfway through Wealth in 3 Years, creating the stock notes. At least that's almost complete. And then just trying to get this picture. And I was like, where have I seen this? Where have I seen this before? And it rattled people, and I had to go back to the charts and explain them what was going on. And then I remembered, since COVID, markets do this now because the new take-care profit for markets is March. I don't know if anyone is aware of this. Markets think in 3 months, take profits in a year, in a 10-year span, right? So this is COVID 2020, and then with a recovery in March. Look at what happened in 2021 last year on NASDAQ, when everyone was like, what's going on? Why is NASDAQ now falling? September, blah, 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 February, March. It was a tough month in March. It was really, 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 1st February. Look at how the year started. in hindsight, you can't really see how clear it was. But if you see a candlestick like this, these two doji candles, it means market started up quite high, touched that upper trend line, and then came crashing down. This was January, and this was February. And technically speaking, March didn't even do that well, right? So this was one of our first take profit moments somewhere in here where I started to buy, right? You can see the yellow circle as well, starting to buy quite a bit. And price, if you see where price stopped, right? Price was basically meeting this level, right? There was a bullish engulfing pattern somewhere in here, right? You can see this pattern right there, and markets were connecting with that demand to rally on. So that was from March 2020 to March 2021. And then we're at the new rally. Now, the thing that is a little bit interesting and also a little bit worrying is that this break of structure starts a whole lot earlier now. So this January fall now mirrors the previous year falls. So there is the red candle there in January in 2021. Before COVID recovery in March, we have to talk about the COVID candlestick pattern in January. And you can see here in 2020, we had a bearish engulfing pattern, right, so to speak, right? You can see that's January. So I'm like, okay, fine. So markets haven't changed this cycle. Okay, that's all it means. This market cycle is absolutely important, right? So a lot of you who are used to indices, number one being buy profile assets, because they are. That hasn't changed. They really are. The sentiment is so heavy that some charts, for some charts, like you saw there with the Dow, for some charts, it's okay. It's okay to almost accept the fact that markets might not come to those all-time highs immediately. All right, this is what the Dow looks like, the US 30 chart. It's absolutely okay to say, you know what, this might be that thing that Leroy has been talking about the lost decade, right? The thing that Ray Dalio has been talking about a change in world order, or you know, whoever you want to listen to, that it's okay to almost perceive this as a short-term necessary retracement. There's something called the Buffett indicator for stocks, and Buffett has been warning for 2 years. Took 2 years though. He's been warning that markets are in a big bubble, and that bubble needs to pop, right? Everyone calls it the Buffett indicator, right? And it's quite a scary thing to see, you know, that people jumped into the markets, people jumped into crypto after missing the early adoption stage. So there's so many beautiful things at play here. But my thing is, as a trader, I'm thinking about my short-term, medium-term, and long-term trades. Short-term, hours to several days. That's what we do at 9 a.m., right? Those intradays. Mid-term, I have not been able to get a new good long-term swing trade this year. It's been absolutely, either we get triggered because of volatility and it doesn't go our way, or it's short term and you make a little bit of money, or you have to break even, or you don't get triggered at all. Because in the midterm right now, several days to weeks to months on end, right, markets have just been ranging in these massive blocks. You can't see them until you flip to weekly. And then you'll see that there is actually a break to the downside on most of these blocks, whereas things like gold finally broke up to the upside, right? So this is like kind of like the full picture and context before we start looking at charts, right? So apart from that, guys, I promise you in this news headline that I didn't see anything, you know, anything else to kind of like, you know, to hamper on. So if it's okay with you, I would then now like us to get down to the heart of things, right? USD continues to fall off the NFP. Well, that's very predictable. War stuff. Farm payrolls, brilliant. All right, cool. So I'm going to close this tab. This week, before I move on to charts, by the way, I believe this week we've got one more big report that, you know, everybody is glued on, which is going to be on Thursday. All right, CPI. Right, you saw what they did on NFP. So the reason why I say this is weird and bogus, watch how they manipulate the stuff. You saw what they did on NFP, right? On NFP, they say despite the inflation, despite the rise in cost of goods, despite the supply chain, despite the fact that we're employing more people every month, the average hourly earnings in the month of February did not go up. And that's interesting because next week, we're going to find out the CPI data for the month of February, which directly looks at, and to be honest with you, the relationship with this particular country, the United States, and inflation. And if you look at CPI data, it's been consistently going up since inflation fear started end of last year, the last financial quarter of the year, which is basically October. October, CPI was positive, 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 positive. All CPI has done is just got involved positive and positive, more inflation, more inflation, more inflation. Why? What's CPI looking at? It is the change in price of goods and services. So if I'm selling a car and my car is $10, when you come back to me next month, the car might be $10.50, and then the next month $10.75, etc., etc. Because I'm costing in inflation and I'm pushing this business now. I am pushing the cost of inflation to the consumer. I'm not gonna get hit by inflation as a bread manufacturer and swallow the cost. If it costs me more money now to get flour to make my bread, it means the consumer, when my consumer buys the end product, sorry about that, which is bread, I naturally am going to transfer the extra additional cost to the customer. That's literally how all businesses on the planet operate. If something goes up in raw material, I push it there. So prices have been steadily going up since last year, October. Now, they just told us that wages didn't go up in February. So watch out for this report. Watch out for the manipulation. All things being equal, right, from a 0.6%, what they might want to do is increase it from the previous month, but maintain a low focus and go 0.7. I don't think that's possible. I think we're looking at a 0.8 to 0.9, but just watch out for this on Thursday. After this is the same Thursday that the FOMC already said tapering will come to an end. It's the same Thursday that the FOMC also said they're going to stop printing money, and it's 4 days, 6 days from then on where the FOMC will increase the interest rate, right? So I think that's a good wrap up fundamentally of where we are and where I think everybody kind of like needs to be on the same page. Tech stocks are down as usual. I mean, we just did that stuff. Energy sector doing quite well. Exxon was one of our big winners, for the last 2 weeks. I missed the wheat trade that Dr. Francis brought up. I don't know why my mind didn't remember wheat. I just ran to energy, but wheat has been doing crazy good. So all these things are green, and the rest is just dull, right? So I'm going to close this as well. Join the academy. This is about to change, by the way. I'll send an official email to everyone. So we're hosting the course somewhere else now. Since module 3 and 4 are coming out, I'll need a better platform. So I found one finally to host our course. So everyone, you use your login details, so your student numbers, but all of that stuff will be emailed to you guys in the course of the next few days to weeks, because we're finally done. I didn't want to host module 3 and 4 on the Google Drive, so I found a far much more better place to host it. I'm quite happy with it. It's quite interactive as well, so we can now do some private stuff for students only there as well. Right. So now let's look at money. Where's the money? I am very much still behind with my COT spreadsheet, guys. It's been a nightmare. I'm behind with the podcast, though I vowed that no matter what happens this week, the podcast has to start. Fundamentally because the podcast is so important. And I could tell my frequency is quite low now, my vibrational frequencies, because I was feeding myself as much as I was helping people, get into the stuff, and just short-circuiting that stuff, is unfair to myself, but to also some of you have actually had the balls to come back, which I thoroughly appreciate, and tell me that, dude, it's not cool. Where's the podcast? My time is literally planned. So all my days of the week are planned by the hour, except for maybe Sunday. I do apologize. And so the only way I could catch up with everything that's going on in the Ukraine for our clients and for our stocks was to take the hour of the podcast, right? Otherwise, there would be nothing in this world to tear me apart from reading. So I do apologize for that. So you can see there's a gap here. I'll have to fill the gap between the 15th of February to the 1st of March. I quickly just took the latest stuff. I wanted us to just focus on a week to week, because between London sessions and every week we do war rooms, I think I've done a good job in keeping you guys abreast. So this is what's happening. And I find it quite, interesting. And unfortunately, but maybe fortunately, we're going to have to do a comparison between mid-February, all right, and the first week of March, all right. So it's just to kind of like see what's going on. And you can see off the bat, the dollar, right, we've got an 85%, almost 86%, basically strong, long bias on the dollar. And as of last week, Tuesday, we're still very strong on the dollar because the safe haven, right? That's important. But, the sentiment is kind of like slightly changed. And that's because the smaller banks and smaller hedge funds like me would have taken profit by now. Once you make contact with the governing supply, you reduce your positions, right? So it's not necessary that sellers are taking over, even though it's a big supply. It's more to say it's a very big supply, and markets could still push up into the supply, find a better multiple, time frame analysis area like a daily supply inside the DXY supply. But for the most part, price could also start to slow down quite a bit, and so we can see that this is dropping. AUDUSD, a freak of nature, right? The shorts are still strong. They dropped a bit, but they're still quite strong. Net positions are onto the negative, right? So all you can see right now is markets looking for that perfect place to sell from, and it's seemingly getting more difficult to figure out what on earth AUD wants, what it's looking for, right? Euro pound, right? 50-50, but I can tell you right now we are dropping from a governing supply, and it's just going to be a non-stop drop. Euro pound has finally made up its mind. It's going to be a non-stop drop, although right now it doesn't look like the banks are going to be adding to their positions that they had probably 3 to 4 months ago, right? So right now they're just maintaining the status quo with money, right? So 50 longs, 50 shorts, right? It's very balanced. Some momentum to the upside on Euro USD as of last week, Tuesday. Once again, let's look at Euro USD 2 weeks ago. This thing had been on 50-50 throughout December, January, etc. 56 long, 43 short. So finally, we're getting a little bit closer to that 60%. Only at 60% will I agree that there is now, wait, am I the right thing? Where's Euro USD? Yeah, there is 58.3 as well. Only at 60%, when the longs get to 60%, will I start to almost concede that the monthly governor might be taken seriously, right? But for the most part, to also be mindful of this, net positions are very positive for Euro USD. Right, it is a loved liquid currency. Both banks and hedges use it, to get what they want from the markets. Pound, still playing the 50-50 game. We'll look at pound from the charts perspective. NZDUSD getting ready to follow its cousin AUDUSD, right? So potentially look for shorts there when the time comes, right? Remember, COT just gives you a direction of the flow of money. You must then match this with structure, supply and demand. This is useless information if you still can't read the charts properly. If you can't read the charts properly, take the course, right? You can't live off once a week. It's up to you, but I would encourage you to take the course whenever you're ready to take the course. A USDCAD, strong dollar, sure, but we need better. And the reason why this is lagging behind, because remember, USDCAD and DXY are so massively, big correlation charts. In fact, it was on Friday, literally on Friday as well, that I posted DXY and USDCAD on a social media page just before NFP. I gave out about 3 clean trade ideas. Look at DXY, look at USDCAD. They are perfectly aligned, right? So if you can read DXY clearly without the pressure of other currencies, you simply find the other supplies and demands at that particular level, all right? And I promise you, you will find them, right? This is what I'm talking about. I literally posted this on Friday just before NFP. Pound USD was that sell trade I gave you guys, and I gave you guys the aftermath, and then USDCAD and DXY, everything perfectly aligned, right? To the upside, breaking of market structure clean. Remember, there was no supply last week Friday. There was no daily supply to stop DXY. So markets definitely at the time of their life. So it's definitely worthwhile kind of like just catching up with us on the socials. Although I try to dump as much as I can on the public Telegram group, although sometimes I feel like, never mind. Right, so USD Swiss franc, USDJPY, right? All of a sudden, very much a big jump now. Serious commitment to sell. Number one, USD Swiss franc, and if you track Swiss franc, despite how behind I am on this thing, Swiss franc has been lavishly weak, right? Very weak. So anything could have been stronger than it for the most part. But now USD Swiss franc as a whole is getting ready to fall to the downside, which kind of like matches where dollar is right now on the supply side of things. So just watch out for that. But banks are still net positive. This means there's still a lot of good, strong buy orders that they first need to clear out. So don't get caught in the trap. USDJPY, same story, right? And then holistically COT data, just scroll all the way down to the first week of March where we are. Sorry, guys. So I want to quickly, re-emphasize what we've just seen. AUD week, Swiss franc week, JPY week. In fact, the Bank of Japan, I saw this the other day. They're only going to consider raising their interest rates in October. So this thing's going to be weak until the end of the year. So just be mindful of that when you're taking your trade ideas. This is also terribly weak. And then you can see, the iron with the Russian ruby. It's not going to go well. Markets have been really, really, really focused on tanking that thing as we go very long on USD ruby. Right. So this is literally what we have right now in the markets. And now, armed with everything that I've just spoken about, and I hope I was not too quick. It's just that I know that time disappears. I really want to focus on at least the 7 charts I put out in the title of today's war room. I want us to go through them clinically, right, very carefully. This is the power of what we do as 365. We can predict the price movements. We've been extremely accurate from supply to demand, from bigger time frame to smaller time frame, and you can start to see this micro cycle evolve. What will be a nice learning thing for most of us is the fact that markets are going to have to show us that they're going to maintain their usual textbook way of moving that they've been moving for years and years and years, or that the introduction of a war could have a big impact in how smart money rethinks, the medium term, right? So the short term, we know, has been sentiment driven. Short-term trades, all short-term trades have been sentiment driven, right? They'll use supplies and demands to push in the direction of the sentiment. Medium term, I've been left holding stones multiple times, right, waiting for price to come back. Now, 365 traders, I don't know who's in and who's out who's watching, whether you've done the course or not. This here is a demand. I hear you. I see you. I feel you. I'm with you. You are right. You are not crazy. I told you that this was a demand when I taught it to you, however months ago it was, and you are absolutely right. I want you to ignore it. Ignore that demand. I want you to imagine you're going to PE, but before, maybe not even from Eastern Cape. Let's say you want to get to destination C. This is destination C. And you stay in destination A. And for you to get to destination C, you have to go through B. I want you to kind of like start to think around this, right? So you want to get here, but there is, a small town along the way. Going around the town would take forever. You ever tried going around the whole city, right? Because you're avoiding traffic police, right? I've done that before. It's worst idea ever. Got into these weird roads, etc. But I didn't want to be stopped. I was going a bit fast. Now, it takes forever to go around the city than to go through it, right? What's the closest point between 2 points? Straight, right? The closest distance is always to go straight through. So I want you to imagine the possibility of markets bleeding through this area and coming down here. I want you to imagine that. I could be wrong. Guys, everything that I'm going to say for the next 3 war rooms, today, next week Sunday, and the other Sunday, right? And potentially the whole of March, I show up 98% confident that I have a very good sound understanding of what's going on. Because of the shifting and the multiple things going on, I'm dropping my 98% confidence to about an 80, which is still bloody good. But I'm simply saying I'm moving more carefully in the markets. I don't want to just buy immediately. I want to know what's going on. If I saw a candlestick like this last in March 2020, I would automatically know candlestick language. A big doji like this is massive market rejection. It's also a strong spike to the upside that takes out any supplies that are gonna come in between a rally. It's also made contact with the demand. Therefore, recovery was easy to pick in 2020. We took these buys because it was clean. The governor was clear. Now look at what's going on now. Let me show you first of all with a simple trade idea, my NFP idea on Friday. Right. I want you to see exactly what it is that I'm trying to tell you. You have to, at some point, get used to reading the charts and getting the language done. So we're not going to cheat. We're not going to look at the aftermath. We're literally going to come to where I was before I got up. And I normally finish the day 12 p.m., 1 p.m. on Fridays if I can, because my afternoons are unfortunately booked for my own stuff, right? So, and it's unfortunate that NFP happens to be on a Friday, right? So this is 11 a.m. All right, I'm gonna slow this down. I want you to see what would you have seen. Ah, man, so fast, terrible. Right, long story short, this is what I saw before I got up, and you can see this is Friday afternoon. By 1 p.m. the bearish engulfing candle came through. By 2 o'clock this was done, right? You know that the London session, the New York session starts at 3 o'clock. Previously I thought 2, and I'd forgotten to check the shifting of time zones. So the first bit of the year it's 3, and then later on when they're doing daylight saving, it will become 2 o'clock. This is what happened. Now, as a 365 trader, you cannot say, well, Leroy, I saw a demand, so I bought. You can't do that. If you've done my course, you can't. And I know we need to get back to one-on-one, so that if this is happening, I need to help you. Because remember, this demand and the trade to buy are not linked. They're not married to each other. You buy at this demand because of multiple time frame analysis. That's why you buy. You don't buy because markets are at a demand. For example, here's another one, and I'll come back to pound USD because I saw this happen yesterday. But then someone asked me what's going on, and I was like, well, I sold Bitcoin, right? Remember, I sold here, and it ran up until I almost made about almost $3,000, and then I kept holding blindly until I was stopped out. So I made $0 on that particular trade, right? Because I was just distracted with life, and it's fine. Then I sold again up there. I told you guys that only time I'll be bullish on Bitcoin for trading is if you guys take out the supply. You literally have to use your own money to take out the supply. Until then, I'm on the base side of things. But I saw something interesting on the socials where somebody saw once again a demand and then tried to buy here. Right, this is literally Friday, Saturday into Sunday. Right, this is what's happening right now on Bitcoin, and you can see just like pound USD on the 1 hour, Bitcoin on H4 chart. There's a demand. It is a beautiful demand. It is fully impulsive. It's got a beautiful imbalance. But if you forget about the basic stuff like multiple time frame analysis, where is the bigger side of money leading towards? Is this a buyer's market or a seller's market? We don't ask yourself such simple questions. You will always be found holding, right? So the reason why I knew for a fact that NFP was going to be positive was there are so many reasons for that. But number two, DXY removed supplies and made sure that morning it was removing supplies. Your risky assets, EURUSD, during the London session were not making headway. Remember, markets price in everything, which means you're looking at movements that are based on a futuristic price set. Like markets have already decided where markets are going, where price is going. They've already decided. Wherever price is right now, it's because it's linked to a direction. We teach on this stuff in our module 1. So when I saw this trade, on Friday of the NFP, and I'm going back to the way EURUSD is today, I said, why on earth would I buy? Because there is a demand here. This seems like a trap. Just buy an hour before NFP, so when the volatility comes, markets will pick you up. I get that trick, but I'm not that stupid, right? Why would I buy if the candlesticks are printing a counter order block before data is produced? This to me is a strong sell setup inside already a weak demand, weak on its first touch, and the structure beyond it is downward. I'm not buying in a down market, and that's what I'm asking you to do. I'm asking you to borrow me your time as I give you my eyes so you can really see what Euro USD is telling us. First, from a governing perspective, Euro is weak and dollar is strong. It has been like that for a very long time. Dollar might start becoming weak because it's now by a governing supply. And naturally, Euro would be strong because Euro has now also made contact with the governing demand, right? But the thing is, if I'm buying Euro, and I want you to be very clear, this is what I'm going to do. It's like AUD is leaving a demand. I'm gonna check out AUDUSD, brother. I'm gonna have a look at that comment. Thank you so much, man. Right. So if I look at Euro USD very carefully, I could buy, but to where? How far would I go? That's question number one. What is this? Why? Why? Right? Why did you break this? Okay, and I get it. You broke it because there was pressure here. There was a supply up there. Sharp. I get that. There's a strong demand, absolutely. So price could help, yes, but there is that story C, B, A. Want to get to C, sometimes I might need to go through B, which means this lower demand here might actually be in term for a retest. What does that mean, Leroy? Well, first of all, it might buy the market some time. In my humble opinion, markets are rushing to get to areas of value. Let's have a look. We are now in the month of March, ladies and gentlemen. Let's really think about this. But today is the 6th of March. We haven't even finished 7 days in the month of March. Look at the size of this candle. I mean, there's still about 24 days in the month of March, and this candlestick is so big already. It can't get any bigger, right? Look at the average big bodies of Euro USD candlesticks. Look at this one, bearish engulfing pattern. That's nice and big. That's nice and big. It's literally the size of a 30-day candle. Look at this. This is 30 days, right? This is like a month. This is the month of May. 30 days, 31 days. In the first 6 days of March, we have something that big. Problem number one. Problem number two, we've got a wick out. So a wick out is already telling us that there is now a range in this candlestick. Remember, a red candlestick, for those of you who come to the course and you know why this is important, a red candlestick closes at the bottom but opens at the top. After all, if I'm a seller, I want to sell high, so sell from the upside and hold my profits all the way down and close at the top. And so right now, this candlestick, the red one, for the next 24 days, all it will be doing is trying to figure out where it can close, right? All it will be doing is trying to figure out, do I close here? Do I close there? Do I push a little bit lower and close there? You're not looking at the formation of a decision, right? It could end up green in 24 days. You could get eventually, when it's done, a long wick because markets push to the upside and then it closes like this, like a reversal hammer. It could close like this. Very common for Euro USD to close like this. Doji, look at this. You think this wick was like this out of nowhere? Once upon a time, there was a big body and price from the bottom trying to close, pushed price up and created that doji. You think I'm lying? Look here again on Euro USD. Similar things. And every time you get a doji at a turning point on Euro USD, and it has to be a very good turning point, what you get is a trend reversal. All right. So buying here, textbook wise, makes sense. It makes sense. I'm just not doing it because I just think markets might want to buy some time. So however this area closes, you'll see with NASDAQ, you'll get a big red candle, and then by the time that candlestick closes on the monthly time frame, it'll be this big. You'll get a strong wick to the upside. And then the very next candle, the next month, will start to feel that week pushing further to the downside. And I think a scenario that like that might happen. Leroy, why do you say that? Because again, DXY has arrived at its target in March, even though technically speaking, it doesn't have to be orders like this all the time, but in general, banks do think in 3 months and take profit in a year. We're expecting June to June, we got June to March, which leaves us with April, May, where there's a 2-month window missing, just a 2-month window missing. If I forecast the last 2 candlesticks of Euro USD, which would be this one and this one, if I just forecast these two, well, now they're like 3 or 4, right? About just the 2. You could get something like this. Just ignore the last 2. You could get price coming into this demand here. And so that's what I think might happen. And so even though there's going to be a lot of bullish momentum to the upside, and we already seen our COT saying, look, man, euro, right, for the most part, is playing a little bit neutral, but a lot of money is, leaning long. You still have to deal with the sentiment. Remember, this is our indicator, sentiment indicator, the difference, which simply calculates at the end of the day, buy or sell. Where is all the money right now on the table in brokers' platforms in Wall Street? Where is most of the money pointing to right now? And most of the money on the 1st of March, was a few days ago, for euro, for the actual euro, is to the downside. Most of the money for the euro is still pointing to the downside. It's still talking for euro weakness. And most of the money for euro USD as a pair, as a trader's pair, what the banks want to do right now is to push it up. Net position. What does this mean then? Hedges are trying to sell, banks might want to push up because we're in a demand. Well, it means we have to look at the next thing that I teach you guys in week 3 of module 1. You look for the immediate areas of value. Would it be difficult to assume that the banks are going to use that money only to push Euro USD up here, which wouldn't take time, right? It would take us into the next monthly candlestick. This becomes a week. The next candlestick opens and touches here, and then we might see continued selling, right? So I'm just giving you guys some type of perspective. But by the time the month of March ends, the first 3 months of the year are done. So then that got me thinking. Let's look at the 3 months chart. In the 3 months chart, right, you have a situation where if this is a demand, markets have really borrowed into it, right? Because remember, you'd have to draw it like that. On the 3 months time frame, that's how you have to kind of like draw. And then when you draw it like that, you need to have a debate with yourself. Only you can have this debate with yourself and ask yourself, is this a valid demand on the presidential chart? You have to ask yourself, is this a valid demand? Because if it's not a valid demand, then it means money isn't stopping there for nobody. If it is not a valid demand, for example, we had a valid supply on the presidential chart. Fantastic. So we went down, which means candlestick is this one, this big green candlestick is technically, part of a supply setup. And we don't normally count that in our imbalances, which means you only got one candle moving away from a so-called demand. This one candle representing a financial quarter, 3 months. But for the most part, markets seemingly don't care. Every time price gets to a valid supply, it goes halfway and it drops. This seems to be digging a little bit deeper. And on top of that, there is a better real demand with a far much more better explosive pure imbalance to the upside, which markets might want to hit, right? So for Euro USD, even if they are buys, I'm going to assume that all buys are going to be short term, medium term, which means all buys are going to be leading to something like this, which makes sense, right? Because we saw already that dollar DXY has gone down. And what I'm going to do then is if I join those buys with you guys and we talk about them and we agree that they are well worth the risk taking, etc., we're going to be looking out for when it is now time to get out of those buys and start reselling. And I think somewhere in here is where we'll get our chance to sell. It's exactly the same place where most of those pending orders that we already have, right? That's exactly where we're still holding. We still want to see how markets are going to operate from that level there, but we're going to need confirmation. Why? This supply, as valid as it is, and as cool as market is from removing the demand, that supply that I just showed you guys is very close to, or rather, we say it's low on the curve. And you don't want to ever sell low on the curve, right? There's no time for me to draw you guys a supply and demand curve. But those of you who I've taught, I would ask you to go through the course and review those videos. But we are very low on the curve. Selling low on the curve is literally inviting disaster most of the time, all right? And you want to buy low on the curve and you want to sell high on the curve, not low on the curve. But for the most part, there's a situation that looks something like this in Euro USD, where this is a potential. Now, when we do stuff like this, we need to find the counter, right? So the counter is markets right now are already interacting with a weekly demand inside that governing structure, this area here, right? Markets are already interacting with the weekly demand, just inside that governing sector, which is potentially pushing up price. If I come to the daily, you will see that we had a demand on top of a demand, and markets decide to choose the lower demand, breaking this and coming somewhere inside the zone. And so markets are really faring through. And this yellow zone is that same zone we saw on the governing time frame, on the weekly time frame, and now it's the yellow zone we're looking at on the daily time frame. So it might be worthwhile waiting, where we have said many times in these war rooms why we want to wait. But when price gets here, whether Leroy is there in your life or not, please be mindful of the situation with the DXY. What would work well for me is that the dollar starts to fall, right? And we've seen a scenario now where interest rate hikes can go up, but the dollar still falls, right? Just depending on which trend it's following. We also know that most of the time when the interest rates go up, it makes the dollar strong. We have to play the game the way FOMC is going to play the game. This is a big week for the Academy. I'll be pulling out the Wealth in 3 years stuff. I once again encourage you, if you haven't joined, if I know someone feels like, hey, this guy really wants our money to join. No. It's just that you're never going to get things at this price. And there's a lot of stuff, specifically the March financial note, March, April, and May. Those are what I call my re-foundational notes into digital currencies. I won't even be looking at a lot of stocks, right? Because stocks are extremely long term. So stocks are 5 to 10 years. But the coins that I want to talk to you guys about, in the crypto world, and how to API them and blah, 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 stake them, and which ones and what, are generally the stuff that will give you guys six figures, give or take, however you are investing, how much you invest in, if you dollar cost average within the next 3 years. So that's why I'm pushing for that. We're not going to get those same prices. But more importantly, right, this week also, I'm going to cover some stuff that I don't know where to put it. I don't know where to put those videos. It's not necessarily War Room. It's not 9 a.m. But it's just stuff you need to know about how to operate in a recession, right? How markets behave in a recession, because we know that's really around the corner. But we want the dollar to drop a little bit from that supply for good 2 weeks. And I'm not so sure if there's space for the dollar to do that. But it'll be nice. It'll be nice. We saw that after NFP, the dollar rallied up using NFP to explode. The dollar left a whole lot of gaps, even on the 1 hour time frame, that still need to be resolved. And markets could use these, right? So, but markets could also gap to the upside today at midnight, when they find out that Russia is doing something else, or bombing, blah, 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 the sentiment, etc. But if you start to peel out and go to the bigger picture on the DXY, you will see that the dollar has become too parabolic. We don't want our charts like this. Things that we like to buy in life, we don't want them to give us money so fast. We want them to accumulate and spread. We want them to do it in a loving way, right? So if you look at dollar historically, markets will go up parabolically and then even out and even drop, retrace, drop, retrace, go back up. When the structure gets so parabolic like this, look at how big the drop is, right? Markets pretty much almost come back full circle. But when price is evenly distributed, when markets touch, let me not mess this up. When markets come back, they touch an area of value and they take forever to come back to it. And in fact, they never do come back, right? They create new demands to catch them, because they are, a whole lot level higher. But parabolic structures normally require a lot of correction. Parabolic structure like this will require a lot of attention. right? So you can see on the 1 hour price was already reacting quite strongly to that area of supply, made contact with that area of supply by straight after NFP, or just before really, and rallied out, and then markets priced in, the impact of that supply. Because if you think about it, you get a strong dollar because you have positive NFPs. But look at markets, right? Markets literally hit a demand. Q3, the news came, and the dollar still slightly fell slowly. But pound USD were better trade ideas than USDCAD and EURUSD because they were going to know for a fact that outside of this governing supply, there's still a win for the dollar. So they fell too, right? They fell more drastically, right? So there's still a long way to go, right? So the whole point of me being here is when I look at DXY, this is acceptable, right? This is acceptable on the dollar, which means during this period of a fall, which I'm not saying might happen because the sentiment is what's going to push price up. As long as we're above 95, we're still very bullish. As long as the dollar is above 95, we are good. But this drop is going to happen. Whether it's here right now or from up there later on in life, it's going to absolutely happen and necessitate the change of hands between charts like Euro, USD, etc. So right now, personally, I want to buy anything on Euro USD. I'm going to watch. If you see how Euro USD fell on the daily time frame after NFP, it fell straight into a first demand zone, right? One of the first demand zone inside the governing demand zone. So that's a big deal. It is one of the first demand zones, fresh, all that kind of cool stuff inside a clean area of buying. So if this ceasefire had happened, or if it does happen, for example, markets will take that as good news. Markets will be like, oh, thank God, ceasefire is happening. Thank God, 200,000 people don't have to be killed for nothing. Thank God, Putin is actually listening to someone. Remember, we've been trading sentiment for the last 2 weeks. And so what that happens is that's good news for the market. You'll get a strong push to the upside, a massive gap, risk assets running like crazy, positive, because of the good news. And they will suck as much of the demand, the buy value, because in terms of structure, markets have actually arrived at a buyer's market, right? Outside of war, this is a buyer's market. So the combination of risk on sentiment or good news in the market plus a strong demand, this is going to explode up. So like I said, I did see someone ask, look, man, I mean, a Euro USD buy, or I want to buy Euro USD. I mean, I haven't been able to catch up with all the messages in the private Telegram group. But those of you who are wondering, if you've already been triggered because you did have a pending order somewhere up here, you have to, pray that market gap to the upside or that there is no gap. So no gap scenario is also okay because then you can quickly close and reassess your trade, with minimum loss, right? But what I don't want to see is someone who's got like a big lot size and then markets gap up about 50 pips against that person. It's happened before. And all of a sudden, when you open on Sunday, markets open here. All right. So this is good, by the way. So this is, sorry, I'll start again. If markets gap like this is good for you because if you're in a buy, this is great for you. If you're still holding Euro USD, you didn't close on Friday and you're selling because of NFP and markets gap to the downside, this is great for you too because remember, you're selling. What would suck though is that someone automatically bought via pending order when price got here, but the sentiment hasn't changed and then markets gap to the downside. That's gonna hurt. Not only that, but your stop loss might not get triggered. It happens where if markets gap or jump your stop loss doesn't get triggered, which means you can still run at a massive loss now. Not just what you're risking in the markets per stop loss value, but markets will pull from your capital until you are margin called or you manually close the trade, right? So just be very careful, and you only know when you know tomorrow when markets open. So I would keep an eye on the headlines just before I go to sleep in case you need to stay up at 1 a.m. to make an adjustment. I'm not trying to spread fear. I don't know what's going to happen in terms of that kind of stuff. All I'm simply saying is I just want you to be mindful of the fact that we have not seen as such a gappy market in such a long time. Markets gap every now and again, but not every day. Like they've been gapping a lot every day, all right, on very big time frame. So be mindful of that. Right. So what's my trade idea on Euro USD? Not much has changed. I'm waiting up here for a sell setup, right? Which is that weekly area of value that I showed you guys. I'll show you guys on the chart that we're working on, right? But for the most part, I'm doing nothing. I want to wait up here for a sell setup, which is also this area here. That's area number 1 above, right? Because this is a good place for a retracement zone. And I'm also gonna put a sell setup just below it there. So there'll be a pending order here that I'm willing to risk 5% on, so that if I do get triggered up here and the sell is positive, I'll make whatever I lost here when I got stopped out. Obviously, it'll be best to multiple time frame and do clean analysis, MTA analysis on the zone, to ensure that when I get to the daily, I'm a little bit more comfortable, right? But for the most part, I think markets will come sell up there. I think markets will have to make their way up there, somewhere up here. But time will tell, right? So that's Euro USD, and that's the whole, hoo-ha. Markets are very close to strong demands. Watch out for that this week. If you are good at what you're doing and you know how to get out, looking for buy trades, right, is in your best interest right now, if you know how to get out. And how to get out means when to get out, before markets walk you out, right? Just looking for the stuff, right? And a fun thing to do on the H4 and H1 is to draw retracements and see what type of retracements markets have been offering and respecting. So that's 50% on this immediate leg here, 10 February. I think that's when war talks or war fear started, 10 February-ish. Then we have swing high, swing low there. Right, and you've got the situation here, golden ratio. This is all done on the H4 time frame, by the way. If I pull out normal candlesticks, I'm sure you'll start to appreciate what's going on, right? So there's some stuff here, golden ratio, markets gap down. I think it was the whole of last week, right? So there's a big gap down somewhere there. And markets did not finish completely filling the zone. So remember, I told you guys that, look, at the end of the day, these zones absolutely need to get refilled. Absolutely. So watch out for that. I mean, all the things I play, I'm just letting you know that I want to have a nice big fat trade up here, right, at that zone that I'm very sure about. I would fundamentally want to wait at this weekly supply up there, right? But there's some small things that we can do down here. I don't think I'll be able to buy this market up right now unless if I'm intraday trading it. So if in the London 9 a.m. sessions that we host on the channel for free, if I do pick up that there is now finally an opportunity for me to buy, I'm sure I will, but it'll be very slow type of buy, very small type of buy, just actively collecting pips. But it's not the type of trade I'll take under pressure right now, because Euro USD is still weak, right? And dollar is still strong despite the doom and gloom coming. USDJPY, we had a buy order here that has not yet been triggered, I think. Yep. Right, so all these are short-term trades. This is nothing. The real money is here in the swing, right? So you can see, USDJPY has taken its sweet time to come back to where it belongs. In fact, it's taking more time, right? So markets are here, all right, and I'm expecting this thing to drop a bit more, like a lot actually. And that's because of monetary policy divergence, right? So these two, when it comes to interest rates, are almost different, like always on the opposite end. And so we know that realistically speaking, we have the makings of a strong dollar. A strong dollar then would definitely mean, price rallying on and on and on and on and on and on, to the upside. And this reminds you of that DXY chart that I just showed you, or also reminds you of USDCAD JPY that I just showed you. But there we go. This is just a perfect example of price just doing the same thing over and over and over again, right? So markets rallied up here. And so it would be nice now if markets were strong enough, right? Literally, if they thought for themselves, we're literally strong enough to come all the way down there and then, react to this demand, I would buy USDJPY again right here. Honestly speaking, I would try my luck there. The problem is, the longer price takes time, to get back to these zones, the difficult it will be to maintain a non-bias trend line, because you want to have a non-bias trend line on your chart so that you can actually see for a fact if this person, or sorry, if this demand is going to hold. You have to be able to test that, literally see if the demand is going to hold. So just be mindful. You can set your pending orders, but when you do that, just remember, honestly remember, that anything can happen here. But in the long term, like I said, monetary policy divergence is on, and our real target for USDJPY is 121, 121, right? So this is a good place to get out. Right. So what I would like to see this week is, a bigger fall. I finally break to the fall. And all these trade ideas, the bigger fall, when they finally do happen, they're all linked to the fact that the DXY is now at a monthly supply. Right. So right now, if I go H4, right, we can see, zonings. Let's go to 1 hour. Sorry, just want to super clear clarity. Right, so you can see on the 1 hour time frame, H4 from daily time frame, right, these candlesticks and price in general are simply respecting supply and demand. They're just doing their job. When markets get to a demand, whether you like it or not, markets will buy. We only want to buy not because markets have gotten there, but because it aligns with the trend. Right, when markets get in here, they did, and markets bought all the way up in this, and etc., etc., etc. Now markets have almost come full circle to this area of value, and they've done a couple of tests before. They've got, this whole cluster here, which works out to be one test, right, and it went all the way up into a supply on the 1 hour time frame, and now it's back down to the same area. And if I'm being honest, most likely will be moving to retest this area, right? And unfortunately, this is kind of like how it looks right now, that markets might come back down here and buy again. All right, buy again at this level there. Yeah. So for me, I won't be buying here unless if it's the 9 a.m. intraday trades, and I know I'm going to be out of this market by end of day, then sure. But in terms of swings, if we get the type of reaction we want from the DXY, we'll have to come back as quickly as we can to this chart. But in terms of swings, if DXY is taking a break for the next 2 to 3 minutes, 2 to 3 days, 2 to 3, weeks, so to speak, then I'd rather sell. I would rather sell this pair all the way down to my daily demand. I'd rather sell. All right, so watch out for this. Wait for confirmation. It's a confirmation based trade, but you can see on the daily time frame, not much cluster or last entry there. Markets are just trading sideways. Remember, I said this earlier on in today's video, that be careful of these boxes, right? Because I know oil has broken out to the upside. I know this and this is still stuck in its box mentality, etc., etc. But what that all that does is it means you get to miss the breakout if you're not careful, right? Markets are ranging because they're accumulating orders. That's why we can draw a rectangle. As soon as markets are done ranging, a decision will be made. Where will this decision be? The decision will be around the DXY, or markets drop on the DXY because the DXY has reached a supply, or markets interest rate hike on the 16th. Markets be like, yeah, FOMC is back, right? Money being taken out of gold into the dollar, all that kind of stuff, right? If this pushes up, then obviously this does it. I know my war rooms are long because I go through a lot of assets and I talk too much. I know that. But for your trading, for your mental health and your trading, and for clarity, I mean, I'm trying to teach people cluster trading, in the best way possible. You really want a handful of assets. in your first year of serious trading, not in your first year of trading. You can come to us in the academy. You've been trading for 6 years. After you learn, you'll realize that for 6 years you're wasting time. When you now take trading seriously, you want a cluster of pairs that you want to know the way you know yourself very, very well. You also want those pairs to include a couple of things. Number one, you want a diverse portfolio. We talk about this a lot in the Wealth in 3 Years program. You want to diverse what you hold. You also want to diverse what you trade, because in there, you want to start teaching yourself market cycles, like cycles in the market. So you want something like EURUSD, because EURUSD, right, is the most liquid thing, and it'll give you that risk on, risk off vibe. So you're going to learn about that immediately. You also want something like gold, because gold, if you have a healthy enough, small enough, which is XAUUSD, that's gold, right? Because gold, generally speaking, is annoyingly a range market. Thanks, man. Thanks if you enjoyed the gap explanation, right? Gold is a simple ranging market up until there is a need to wake up the giant. But gold works through supply and demand. So you gotta see the big picture. If the banks are not buying it, you're not buying it. Right, so you want stuff like that. If you've got a broker like Arbitrate, then you want a hitter. You want a broker that will give you hitters. Hitters are easy swings. I find crypto so easy to trade, man. I mean, if someone told me, gun to my head, let me even use such a silly example. If someone told me, gun to my head, I was about to say, and they kidnap my kids and they want a ransom. I don't want to give people the wrong idea, but I would run to crypto, because crypto is easy to trade. So you want a broker that gives you such options. EURUSD, you've got a bit of gold, and then somewhere in here you've got BTC USD, like trade a little bit of Bitcoin if you want. Just check the spreads, right? ETH, USD, don't trade both of them. Use one of them as a primary market to give you the sentiment of the next one. Bitcoin, in case you're wondering, is primary, right? Ethereum will move. Ethereum is much more clearer moves on the charts. Daily H4. Bitcoin will have two supplies. Ethereum will only have one, and you'll know that's the supply. The higher supply is the one, right? So you want stuff like that. EURUSD, Bitcoin, Ethereum. You want a little bit of USDJPY like we've just done right now, because you know that you're playing the safe haven game. All right, so you know that money is always going to flow in these markets. Either they're pumping money into this or that. EURUSD gold. Done. Then you want something chilled that gives you good correlation. So I literally buy and sell the dollar DXY, because I literally analyze it every day. And this is my index. My go-to index is not really NASDAQ. I mean, I swing trade NASDAQ, sure, but my favorite index is this, because this, if I'm right on DXY, I should be right on EURUSD, USDJPY, and other trades. I always have DXY. And then what 100% correlates with DXY is USDCAD. There you go. So then you start to master the stuff, right? I'm not saying what you should do. I'm just simply saying, man, you'll think, there are 300 things to trade, so you must trade all of them. But what that does is it messes up if your psychology is not perfect yet, and I know a lot of you are not yet there, then you want to have a small cluster of trades like this that you focus on, right? War rooms will talk about everything, but in your personal journey by yourself, you really want to have, I know this looks disgusting to look at, but I'm sure you guys were following what I was writing, right? Euro, gold, one of the cryptos, XRP is also, very liquid, very tradable. Right, you want to trade. You don't have to trade these main ones, right? You can trade altcoins, for crying out loud. My point is, you want to have 0.01 on a EURUSD swing trade, and it's only giving you $30 for the last 2 weeks, whatever. But you've also got a DXY buy from a long time ago, and because it's an index, but it's slightly cheaper than trading NASDAQ or whatever, it's giving you, I don't know, $120 profit. But because you're very good at reading stuff, you've got something like, I don't want to say it, but let's say Shiba, right? Which actually moves in the trading market, or something even small. So you come here. Let me show you something. You quickly come here. CoinDesk. Let's go to CoinDesk, because if I go to anywhere else, it'll just take forever to find. Come to CoinDesk data, right? And you just tell them to do all the thinking for you. I think my little boy always plays Call of Duty, and he streams live during my war rooms, because A, the house is quiet, but B, every time I do these war rooms, the internet is a little bit slower. But if I tell him to not play games while I do my war rooms, then the house is loud, right? So you come here, you see this coin desk, right? It'll tell you off the bat market cap. We know Bitcoin leads in the market cap. It'll give you a whole lot of bunch of information. But what I like to do when I want to trade crypto is I come to top traded. Why? It's the most liquid. And when I come to top traded, you'll be surprised. See, XRP is the top traded coin, not Bitcoin, not Ethereum. So you can make a lot of money buying and selling in your trades. Solana, Polygon, I'm still in a sell here, whatever. There's just a lot of cool stuff to do. It's just, guys, this whole money thing in the market is endless. But I'm saying, don't get stuck in the rug race, right? Have about 8 to a small thing, a set. Have your own watch list outside of war rooms, right? I come here, you see, this is my watch list. This is all I watch. This is all I care about in the markets. I cover everything for everyone, but this is all I care about right now. And this is since last year. I'm going to change my watch list as I exit out of positions. Generally speaking, my watch list changes, right? Because I want 8 strong things that I'm swinging. Okay, so USDJPY we've covered. I need to move on because of time. We only have 2 hours together, and we've got 30 minutes left. Right, so pound USD is the next one. Pound USD is the next one in order of liquidity, right? So we now know the problem with this area, or why we couldn't take this trade. And I don't regret not taking this trade. If I regretted every trade that worked, but required me to break my rules for it to work, I wouldn't have known the power of the trading system I'm using. The trading system I'm using told me not to take this trade, so I listened. And yeah, banks kept putting a bandage. There's a bearish engulfing pattern. But if you're taking that, if you've been stubborn and said, no, Leroy, you need to look at pound USD more clearly. There's now a new supply. Where would you have put your stop loss? Because they took you out here. You better have been up there. And if it's up there, that's even better. But I wouldn't have done that. I would have just looked at a better stop loss. Let me get better risk reward ratio and potentially done that. Okay, sure. I think I would have put it there. But my point is, we could make these mistakes. Rather just stick to the rules, right? So markets maintained class effect and then took off to the downside, right? And since then, it's just been an interesting show for the pound USD. But we can't understand it in isolation. We have to understand pound USD within its bigger picture. But we also have to understand the pound USD. You can see Leroy is still waiting in every single broker. I'm waiting up there. I'm waiting for a touch. Didn't come. Fine. I took a stupid small short-term trade here because of NFP. But in terms of real money, been out of pound for a while. Now let's remember 2 things about pound USD. It's in Europe, so it's going to be heavily affected by Eurostar, number 1. But number 2, it's going to have primary indications of Euro USD. Now they don't perfectly correlate. In 2020 and 2021, I can't remember which one of the years, I did public lectures for free. They are on our Facebook page. Please feel free to go there. I'll upload them on our YouTube channel at some point. Or I'll tell someone to, because I clearly keep forgetting to do that. And I taught people about my FX book and the resources in here. And one of my favorite things when I was back testing supply and demand, I don't know if you guys know this, but I had to review 1,000 asset classes since the beginning of time. It took me a year before I even bothered to teach anyone. I was making money for myself, but before I even bothered, it took me a year to really study what I had been taught and to see if I really got it, but also to see if it's true everywhere. Right. So anyways, I came across this in 2018, and I've been once in a while, when I remember, I tell people to come here. This is a nice place. You come here, you hit market, and you select correlation. And you just want to know what correlates with what and what doesn't correlate with what. Because when you do that, you have one trade idea give birth to 3 or 4 or 5 or 6. And then you don't have to spend hours scanning the markets, right? You can just simply do it. So you click on correlation, boom. And what it does, it starts to align a lot of Forex pairs, right? Literally as many of them as possible, right? As many of them. This is Euro gold. It's gold, but on Euro. Like, it's a brilliant. This is American, the usual gold USD. You can trade if you've got a broker that gives you so much options. You can make so much money if you know what you're doing. And then it says correlations will range from -100 to 100%, where -100% represents currencies moving in opposite direction, We call this negative correlation. And currencies that are positive 100% represents currencies moving in the same direction. What are we looking at here? Pound USD. So I'm just going to click on pound USD. There used to be a way where you could just open it, right? And that would be nice. But if I can't remember how to do that, I'm going to come here. I'm going to click on pound USD. Let's see what happens. So okay, first of all, I apologize. Maybe in case this is how your brain works. If you go to correlations and you just, what I showed you right now, click here, correlation, this whole thing will come up. And automatically for a tester, AUDCAD must 100% correlate with AUDCAD, right? Because that makes sense, right? I hope you guys can see my screen clearly. There is no way for me to make it a little bit bigger. So I hope it's big and clear. Now, I want to see pound USD. So I'll come, if you click on the ones at the top there, here, sorry, where is it now? If you click at the top, I've already clicked by mistake. So let's try that again. I apologize. Oops. You'd think I have ADHD sometimes, the way I move. Right, market correlation. So I'm going to simply click on pound USD here on the list, right? Where is it? Pound Swiss. There we go, right there. And once I do that, it'll create a much more organized table for me. So let's say you like the pound. And Leroy is asking you to only, trade 6 or 7 or 8 things. Here's the pound USD chart. What you can then do now is to only write down the following things that will work best for you. In the academy, we want high correlations. We only move. You can see even in our spreadsheets, we only want to take things within 70 to 80, from 70%, right? We don't want anything below that, because if you start to get weak correlations, I mean, I used to be strict, man. I used to take 85% and above, and that's only like 2 pairs. Only 2 things in the world normally will correlate at such a high level. You will see top absolute correlation, right? Top absolute correlation means, 100%, these things follow each other. Absolute, like they literally follow each other. You can Google it and you'll get more. Look at the percentages, right? Very, very big percentages. Now, I like the following. Pound USD and Euro USD are one of my favorite things to mirror. It's not as high up there in the world as I would like it to be. And that's why you notice that pound sometimes will mess around. Pound will break out of Euro USD. Euro USD is still dropping. Pound will have one demand in the way, sending the pound up while Euro keeps falling. But best believe it's going to recorrect and find a higher supply and start falling down there again, right? In terms of top positive correlation, this better aligns it better, because remember, absolute will rank you with the things that positively correlate and things that absolutely go in the negative. So pound USD, when it's going up, USD Polish what is going down. Okay, that's how this whole thing works. So if you come to positive correlations, you will see the top 2 things that positively correlate with pound USD is pound USD and pound SGD, which I think is Swedish krona or something. Avatrade does have it, SGD. I don't know which other broker has it. Singapore dollar, stupid me, right? Singapore dollar, right? There's a massive, an 81% positive correlation, and pound, USD with Euro USD. Those are my 2 things for the pound in terms of positives. If I already have time and I feel like it, which I haven't done in a long time, if I'm buying pound USD, I might go look for sell setups in USD Polish or USD Hungarian franc. I might. I haven't done that in a long time. The point of the matter is, having understood what's going on in Euro USD, and that there is such a high positive correlation with pound USD, I need to then do the same thing for pound USD and understand the bigger picture to come up with a similar conclusion. If you see pound, you'll see that it did break rank a little bit for a time. Right? Let's go up here, and we're gonna clean sack. So I haven't done a live class in a long time. This is my live class thing, right? And you'll see, you remember Euro USD, guys. has already done this. Whoop, already. When pound was somewhere here, Euro USD had already come up here and was already making it round. And then pound came a little bit too high, acted like it was almost gonna break, and then only now it's starting to fall. This is the presidential chart of pound USD. This is not the governing chart that we as retail traders would actually use and rely on. This is actually bigger. This is literally the bank's eyes. Banks thinking 3 months in a 1-year take profit target in a 10-year plan. This is about 2008, last financial crisis. If you've never come to my classes, when we're profiling assets, we call this a sell profile for many reasons, right? And you'll notice your sell profiles love finding bottoms in the long term. And this is where the trend is. This is where the money is. Now, pound USD, from a presidential perspective, right, is currently in the process of trying to respect the first supply that Euro USD turned from a long time ago. And in that process, pound USD on the presidential chart is creating a ladder to hell, a downward ladder, however you see it, right? Okay, the month of March is going to be tricky because we're already, it's not even the month of March. Yeah, when this candlestick actually is going to end at the month of March because it started in January. Remember, this is a 3 month chart. So every single candlestick represents 3 months of trading, right? So the first, these are basically financial quarters, quarter 1, quarter 2, quarter 3. You will remember that Euro USD has a bottom here, somewhere here, even on the governing, on the presidential chart, there was a demand. Pound USD doesn't. And remember, this is a 78% correlation chart. So I can start to make long-term predictions. Well, when I sit down with my clients and a client gives me 25,000 US dollars and I draft a contract with them, number one, I'm going to take 50% of the profits. Do you agree? Yes, I agree. Number two, we need time, right? So what we're going to do is we're going to break down our money into 2 take profit targets. I'm going to close some trades. I'm going to pay off my own account without closing any trades only twice a month. Do you agree? Yes, I agree. We will review the contract annually. I don't want to deal with retail traders because they're annoying. They want to know, can I withdraw my money now? Every 3 days. Account management for retail traders is terribly annoying, terrible for the trader psychology. All right. And if you're not licensed, you shouldn't even be doing it. Okay. But none of my business. If anyone is, I don't even want to go there, you know, but just so you know, that's the logic behind corporate trades. Number two, I can then sit down with the client who finally agrees and say, look, man, I think we're in for the long run. I think when I look at pound USD in 2020 in January, and I look at pound USD in 2021, I see, 1 year take profit target. I see it. It's right there. Can you see it? Yes, I can. I can see it. Fantastic. So I think that markets, if they really wanted to go up long term, right, they would have really dealt a big blow to this supply and come up here, but they didn't, because their 1 year take profit target immediately took place and markets are falling. I see that Euro USD, the most liquid asset in the world, has already reached its demand, right? And I think it needs to fall again. What did I say Euro USD needs to do? Is to buy some time. That's why I think CBA. The lower demand on Euro USD is here, but there's a demand where price is right now. I think markets might want to remove that or use it to first sell and then drop, to sell where we said we're all going to try and sell, right? So all in all, this is a long-term journey before we get to C, which buys pound USD another financial quarter, another 3 months to drop. Done. Right. Now let's go to the monthly time frame. Right now, if we come to the monthly time frame, I'm going to remove a lot of these extra zones from the presidential chart because they will not make sense. As I remove them, I'm going to quickly tighten. Those of you need a quick refresh on how we draw zones and why we draw zones the way we draw zones. Right. So we've got that situation there. We've got nothing in here in the governing time frame that will require me to draw a zone up until and only when we get here, right, which is October 2021. Right. Then we finally have an interesting supply, right, where markets ready back in for a quick retest and then prices are leaving. in that process of leaving, on not on the presidential, but definitely on the governing chart, we do have seemingly markets reacting to something. You can see there was a jump for 2 months. Markets came in here, made contact, and there was a green candle. Contact month 1 in December. In January, we opened with a green candle. Excuse me, right, to the upside, right? So markets were reacting to some type of short-term demand. And I see that. So now I'm starting to understand. In the long-term picture, this thing is falling. But in the short-term picture, markets, specifically the pound, has to do away with the current governing demand structure, right? It did retest a bearish engulfing pattern. There is a supply technically on top of it, on top of another supply, but this has to be done away with. I can't tell you how big it is right now, so let's go down a little bit and start to investigate. I'm going to switch again because I just want all the clarity. Now, if all things being equal, then the only weekly demand that we'll be worried about will be somewhere here. But unfortunately, that is not the case. If all things being equal, right, the weekly demand is slightly bigger. It's overstretched. So I'm going to remove this and I'm going to leave that. So I've deleted the monthly. I'm showing you the weekly. So there's still a drop. There's still some drop that can still occur in pound USD. Once again, makes sense. Follow suit, right? And that's about another give or take 180 pips, right? But markets, because of NFP, have fallen deeply into an immediate weekly demand. We're looking at this one because this one is fresh and it's lower. But right now, where markets are today, if sentiment goes well, if things shift positive, even just for 1 week, this is the weekly chart. So between Monday and Friday, Biden says this, UK does a sanction, German says stop the nonsense, Putin agrees to a ceasefire on Tuesday. That should give traders, market enough positive sentiment to pump up. And the justification for that is there because we are technically speaking within the realm of a supply, a demand, sorry, a weekly demand. But let's tighten this monthly supply zone. We know it's there. We get that it's there. Let's tighten it because we want to see everything. We really want to see everything. So number one, there's that. I will delete the weekly, monthly supply area as soon as I'm done marking out the zones there. So this is, hopefully everyone in the room can follow what it is that I'm doing. Because they've done the course. And if you haven't done the course, don't rob yourself, right? Do the course. Right, so that's one. Imbalance, not that strong, but it's there. All right, let me remove the monthly supply. So we've got our first weekly supply there. The second one is there. I don't know if you guys can see it, right? But it's there. And it gets an immediate retest. And then when it does that, it creates an area of value and leaves a big imbalance. So I mean, what's going on here? We've got 3 big weekly supplies inside 2 big monthly supplies against 1 weekly demand. The last supply that they created left an inefficiency. And that is to say, there's a high chance that it could be tested. Okay. I'm going to go back here and just follow the money. Pound USD is 50-50. They ain't trying to tell you what's what. We're not sure if we're going to push it out this week. So we leveraged our buying and selling equally. There are only 300 sell orders on the table. Not enough to move the markets the way we think it will. Let's look at the holistic data real quick. On the pound, 50-50. Pound as an asset by itself, 50-50. Just like pound USD. Nothing much, same numbers, but net positions, including hedge fund positions, we've got positive flow to the upside. Be careful of that. Guys, I'm taking my time today, but I'm saying don't fall for these tricks. All right, it's there. You just never know when they're going to strike. Would I take a buy? No, my rules wouldn't even allow me. My rules would tell me, dude, you can take a buy with like your cowboy account. So let's say you've got a swing trade account or your rules-based account, and you've got access to funds, and you've got a cowboy account. Your cowboy account, you do crazy stuff. I used to have a cowboy account. In fact, I want to create a new cowboy account for crypto on the, what's it called? FT, the new broker I want to try for crypto because later on in the Wealth in 3 Years program, a month from now, I might want to introduce crypto trading for those people in there. So we're taking swing trades, but I'd want us to all do it on one brokerage, and I found a very good one. A good exchange, good financial backing if anything goes wrong. So it's just something I want to try. So I want to trade it by myself first for about 2 weeks to a month, and then the next financial notes will also include swing and intraday trades in the crypto markets, right? But if you take the buys on your cowboy accounts, don't mess up your growth account. Don't mess up your long-term only big capital account that you have, because the problem is some of these trades don't work out. Right, this is indeed a strong-ish demand, but it is not for the light-hearted. Markets have used it for a sell retracement. Leroy, what do you mean? Draw a Fibonacci, swing high, swing low. From there, when markets came there, markets were pushed up into that 50% area. Right, there's that golden fib level, and then markets came back down. Same thing. Right, this demand is just being used so that the sellers can gain higher ground to sell against any buyers. Be very careful of that, right? So I'm not looking for any type of action there from that weekly demand, although I can see that markets might need to do a retest. So on my cowboy account, if I had a cowboy account, I'll be looking for that. Now, in looking for that, I have to acknowledge that what NFP did was create risk off sentiment, plus the war, which created more risk off sentiment. Risk off means Euro USD, Pound USD, generally speaking, should keep falling. So now in my cowboy account, I have to make some type of commitment. I'm just going to delete this because we can't actually see these areas of value clearly now on the daily time frame. Right. So we have to choose. What are you going to do? If you're looking on daily to daily, you have to wait for this area of value here to take shape for about 3 days. So maybe on Wednesday, markets might do something. It's on Tuesday, give or take, because of thin liquidity tomorrow. Or you take a better risk, which is up there, so that you are far much more closer to a stop loss in case you're wrong for buying this asset, right? Or rather, you want to sell against retail traders. I would rather sell there short term. I would absolutely try to sell there. That's me, because I'm still quite bearish on Pound USD. Bearing in mind, smart money does not want to tell us the next direction of this asset for the next 1 to 2 weeks. They don't want to say, all right? We do know that net positions are very positive. So that's why I want to wait up here to sell, because it's going to take some money to bring price up there. On the H4 time frame, right, you can see markets are doing the same thing that they did at that demand, at that supply, daily supply that we couldn't take a trade from due to glass effect. Markets are ranging in the same area, playing mind games, leaving it weak so that the day markets propel up, right? And I want to say this candlestick pattern here, this language in front of us here, we are due for a reversal, right? So straight into NFP, right? That short-term trade that I took on Friday, markets are gearing up for some type of reversal. So if you're a buyer, you better know where to get out. Also, if you're a buyer, you might have to have very tight stop losses. And if your stop loss is inside a daily demand, you are at risk of being stopped out. But if your stop loss is properly placed outside, you need to ask yourself serious questions about a risk to reward ratio about your buy. Maybe you're not as strict as how I am strict with my accounts. Maybe you can't afford to be as strict as me. Maybe you need to take more risks as a trader because you're in a rush to build your account up. And so sometimes you must take risks. I don't know. I'm simply telling you that my rules tell me that if the RNI is trash and there are supplies like here that might stop me, it means I can only hold a buy up until there. And if that's the case, then this is a 1:1. It looks like a 1:1 to me. The distance between these two looks like 1:1. Because how do I know that if I buy, markets are going to stop there? That's the mistake that some traders are still making. Remember, markets, all supplies and demands are equal, right? We're going to go back to module 1 tonight, right? All supplies and demands are equal. Therefore, you can't have a profit target up here if you have not yet removed, you have to remove the two supplies there. You literally have to see smart money remove their own supplies to make way. So you have confirmation tricks like a trend line break or something. But because, like I said at the beginning of this thing, markets are creating ranges just across the board. If you look carefully, you can see it. And then every now and again, what did I say? They'll break to the downside, right? So because of that, I would be very careful, right? You can buy if you want, if you're a cowboy. I'm just saying that I'm not going to buy, right? So I'm going to move on from pound USD. I think I've been clear, and I'm worried about time. USD Swiss franc is the final major currency of the main kinds of looking at. This is definitely a war room trade that we spoke about, 100%. You can't, you know why I know? Because this happened recently. This is definitely a war room trade where I said we want to wait to sell up here. We definitely covered this, right? But in any case, let's build the trade idea. You saw with the COT stuff, like I said, that this thing is weak, it needs to fall, blah 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 blah. Right? And markets, generally speaking, range a lot, right? Look at this. October 2014, the range broke out somewhere here. October 2020, the 7-year range in this thing. And Swiss franc and his long wicks, hate them so much, right? But overall profile, straight to the downside, right? And then finally broke out of a range and it did break to the downside, right? So now let's look at this on the 3 months chart, by the way, what we just saw right now, right? So there's an annoying range, but we're really hoping that markets have finally arrived at a point of clarity, right? I had to literally combine complicated 365 candles with a bearish engulfing pattern just to see the thickness or the level of area of competition, right? Which is something that is addressed in module 3. Sometimes you have to draw all the order blocks, because how do you know? Markets choose when they want to choose, right? But in terms of clean multiple time frame analysis on a governing structure, I'm not going to compromise my accounts on that. As far as I can tell, that supply is not being tagged. So the 3 months right now is in charge. You guys understand this? The presidential chart right now has agreed to start selling. Right? If you draw it order block to order block correctly, the governing chart is red. Markets have already bowed down to the presidential chart and be like, yo, we'll be back. We hear you. We're going down. Right? So you're going to need price to then come make a fresh touch onto the governor and go down again, maybe bounce somewhere here. Then you're going to need markets to make a retest onto the. This is like a 1 year profit, a 1 year journey for this particular asset that is struggling. It is a drop, a sell profile asset, but you can see it has its moments on the chart where it'll seek out an upper channel only to fall, right? Buy, sell high, right? It'll do that, it'll fall, and then do the same thing, it'll fall, making these little cool flags on the way down, right? So I think that's what we're going to see happening here, because again, the only thing is there are no demands, there are no clean demands anyways on this chart from a presidential perspective. The only clean demand that exists is where price is right now, and markets are overly testing that zone. So in the governing time frame, which is the time frame that most of you have, if you're not paying for trade, which is fine, this is all you have. This is all you have right now. So you have a presidential demand somewhere up here. On the governing time frame, you don't really, it's there, but it's not a rule-based demand, right? The imbalance is way off. And then markets are struggling and trading to the upside bit by bit. And then you can decide for yourself what you're doing in here, right? For me, I generally, because of how price was turning in the structure, we have more than wanted to sell anything to do with this chart for a very long time. Right now dollar strength and dollar weakness for USD Swiss franc is a big theme. Swiss franc, generally speaking, as a parasite, does well when dollar is doing bad, and vice versa. So I like coming here because of sentiment and what's going on with DXY. As long as DXY is strong, I know this will be weak in the short, medium term, right? But it's very important that you almost find the perfect trade idea that is also lining up with what you know about governing structures, etc., etc. Right. So this is what we have on the weekly, and on the weekly you'll notice that you can start to see a little bit more clearer demands, like one, clearer demands on this chart, two, this is one of the weakest ones, three, right, somewhere there, and one strong supply, standing bold, right? And if you go Akinihashi, just for better clarity, you will see price kind of like echoing what I've just drawn right now, right? But if you really draw the Akinihashi reasonable body, highest wick, then this is why this is falling. Okay, so this is almost like class effect, because you know, more than one touch, but at the same time, order block on the weekly time frame supply still intact, right? The question is, will this push to the upside, you know, succeed? Will it push up? That's really what we want to see. But every time markets came here on the weekly supply, I've been very much keen to sell. All right, and the recent one recently just happened. Right now, the daily time frame, quickly tidy up these zones. Oh, that's all I had to do. Right, so that's daily zones demands done. And that's the daily supply up there, which is good. So I'm going to remove it from being red. That's a strong supply to really consider. And then I'm going to draw much more immediate areas of value. This was broken. This was broken. Does not exist in my world. Right? So I've got something like this. With something like this. So I've got a clean imbalance, strong imbalance. Markets rallied into that area and then created a range, spiked up to the upside, dropped, and then dropping further. Right. I should have told you off the bat, I have no intention of doing anything else than, you know, either taking profit or closing. I think actually I'm not in it. So what am I talking about? Closed already, I guess. I have no intention of trading this market right now. USD Swiss franc, I have no intention of trading this market. I'm just giving you guys the direction, right? I would like to sell again the day price comes up here. Okay, I would like to sell again the day price comes here. Here I'm doing nothing. Here I'm doing nothing. I'm not buying, because once again, a lot of these markets, from what I saw yesterday, like I said to you, I spent hours on this stuff, right? Are in a box, they're in an annoying range, right? And this range is up and down, up and down. You're gonna need a lot of money to push them out. And when they do get pushed out, you will get a lot of liquidity rates, right? Stop loss rates. So to the downside and then up, or straight to the up then down, right? And I don't want to be a part of that. And if Swiss franc is really weak, you know, and the dollar does start to gain more momentum, despite the fact that it's really at a supply, right? You can imagine how the dynamics of this range will break towards. So the trade idea is sell, but the sentiment could be so bad with the war that dollar is strong, right? It drags price, you know, up. So just be very careful. So right now, it's one of those trades where I'm just looking at, right? I might have one pending order set up there, but if you're in the academy, you'll get the final decision on the spreadsheet. I know I haven't touched that spreadsheet in a week or so, but yeah, you can imagine, right? USDCAD. That's daily. Let's go to H4. Let's go to H1. Right, we've got USDCAD here, clean break of market structure on the H1 time frame, bearish pattern forming on the PCP, right? And we've got multiple retests, or maybe one retest here, all right, trying to retest the trend line, right? Strong order blocks, market headed, market gone up, right? So if dollar wakes up bullish, or there's a flight to safe haven, and there's a case for DXY to dig through the supply, even though it's not a good idea, I want to tell you right now, you'll be tricked there. The markets will dig when they want, but you'll be tricked. Let me pull up DXY for you. So remember, I say USDCAD is my go-to when I'm trading NFP, and because I understand the dollar so well. I just look at USDCAD to find good entries. It's one of this Friday, I only traded pound USD, but normally most of my NFP trades would be, USDCAD. If it wasn't for the fact that USDCAD right now is paralyzed with war stuff, this would be clean. But look at this. This is USDCAD on the 1 hour. This is dollar on the 1 hour. This is DXY here, DXY. Oh, it's written. You guys can read this. You can see at the back this is USDCAD, and then you can see at the back that it says DXY. Right. So I'm not going to stress that you're following. But on the 1 hour time frame, this is where DXY, by the way, made contact on Friday, literally on Friday, made contact on Friday. NFP, just positive NFP, dollar still fell. It's amazing that this happens. Why? Structure. There's a big supply up there, right? Pound USD, EURUSD will also fall because it was a positive NFP. So markets will price in a strong dollar later on. But right now, they just made contact with a lot of smart money. It's like such a beautiful teaching moment in the charts here. Right. Anyways, point is, markets made contact with that supply, and immediately USDCAD fell. Immediately. Right, and you can see that the trajectory for these two charts on the 1 hour time frame is the same, and markets need to get down here, at least for the dollar, need to resolve these issues of gaps on the dollar, that happen, which makes me worried about buying USDCAD right now anyway here, because to me this drop to these areas is so much further than where USDCAD right now is, to a point where USDCAD, as the dollar keeps falling, USDCAD might be forced to break through some of these demands, right? As the dollar keeps falling, up until the dollar gets to these demands here, right? Which would also potentially, you'll see for yourselves, you'll have to come back and check for yourselves, but it could potentially correlate with a better demand being down there for USDCAD. And so USDCAD burns through a lot of liquidity. A lot of people's stop losses are here. A lot of people are waiting for some retest all the way down here. And it just burns through, takes everyone's money, and then goes back up as dollar finally makes peace with its journey here. So watch out for that on USDCAD, right? But for the bigger picture, USDCAD has always been a fascinating chart to kind of like look at. I'll show it to you right now. We've got 2 more charts left, guys, and then we're done for the day. AUDUSD and NZDUSD. I know we are a little bit over time, but I appreciate your patience. Right, so this is USDCAD on the presidential time frame, and this is probably COVID 2020. I don't like that we don't have more data. We need more data. We need more data. Give us more data. Yeah, that's fundamentally 10 times better. Right, so USDCAD on the presidential chart looks like this. Right, you've got that group there, which markets still clearly haven't arrived at, and that's fine. And then you've got, the Donald Trump supply, all right, which was heavily tested, all right? Like we actually at some point thought, markets are going to break through. Very bullish engulfment pattern, right? And such a deep dig into the supply, right? What saved this whole thing was the fact that COVID came the following month in 2020, and then markets just fell, right? Oil was useless in 2020. Nobody was using oil. In fact, Russia crushed oil to the negatives. And so that's what helped this chart go down. But otherwise, this thing was on its way up, had it been a normal year for the dollar outside of COVID stuff. Or if yeah, whatever. Right, so we've got a very tired supply and a very tired demand, number one. Number two, you've got both new targets and range, a new low coming down here and a new high all the way up there. What markets have done really over the last, I guess, year, 9 months to be exact, but really full year. This is January last year, April, all 4 financial quarters last year, and then the first financial quarter of this year, markets have just stayed inside a demand. This is telling. Markets have just stayed like weekend. But you can see there is some type of momentum to the upside. Like markets are trying. You can see with this last recent rejection, and the fact that markets are refusing to fill this wick and rather than fill the wick at the top, so point to the upside, markets are doing some type of a level job there. Because this demand is weak, you can see there was a repair job done in here. The new bullish engulfment, which was overly tested, but for the most part, it's still intact, right? So USDCAD wants to move in line with our DXY. Remember, our DXY is already at a supply. USDCAD is struggling to leave its demand. It has been for weeks, if not months. Right now, it was stalled here, but markets clearly with long wicks broke out. So we should see some movement to the upside. The problem is that movement to the upside is also going to receive some issues here. All right, so the sell off from 2020 on this chart was just brutal. Right, for the most part, and it gets a really bit clumsy, so I can't really see what I'm doing. There we go, that's a bit better. For the most part, right, markets have one more supply to deal with before coming up here. And with all these weekly wicks, for example, that testing that demand, and then this demand testing somewhere down there, and this being the only demand that wasn't tested, which we'll need in a time of crisis, you could almost assume that price wants to go up, right? But it was going to go up at the pace and at the rate of the dollar. So this is like the only weekly supply right now left between price coming all the way up here. And we've actually, technically speaking, all things being equal, made contact with this weekly supply. Bearish engulfing, retested. Glass effect. And during the glass effect moments, guys, module 2, remember to read your structure. Lows, lower highs, sorry, higher lows, right? Markets want to go up. So this to me is always a good thing to look out for, because I'm like, okay. So even if you were to drop the next time, you're probably going to break this thing, right? What we do need, however, as usual, confirmation is, of course, we need to have one new higher high. So something like that. Then we'll golden. Then we'll know that this thing is still on track, right? It'll come in here, test, but close, and then bounce back up, right? But so far, all I see is a very strong USD CAD, right? In the long run, it's been following suit whatever DXY has been doing in going up and pushing high. We're just going to remove everything because it was just becoming clumsy. On the daily time frame, this is where we are. In those lower lows, higher high formations, markets have stalled to the upside, and the only trade idea that we have, I think, has already happened. We're gonna have to wait. The next big supply, as far as I can tell, is somewhere up here, but there is, yeah, no, that's broken, right? So this is what markets could be looking out for. I'm not yet sure. We will have to have a look what normal candlesticks look like, but the reading I'm getting is, we've got a strong, beautiful touch here that happened sometime last week, in the heightening of the war, right? And if the war was heightened, remember, CAD would be strong, so this would be a negative trade. This would be like a sell trade for now because of CAD, because of the war. The sentiment trades would be taken over here. And then we had a bullish engulfing pattern here and a retest of the previous bullish engulfing pattern. And don't forget, DXY is leaving a monthly supply, already falling extensively on the 1 hour time frame. And now we have a situation like this. And then there's something like this all the way down there. This to me looks like a great excuse for that or for that, right? Something like that, in both cases. Because I'm not triggered in here right now at this instance. It might be a cool thing to trade in the smaller time frame. So we could add it for our 9 a.m. sessions. But we're going to have to read the market very carefully to see what it wants for that day. And that's fundamentally identifying supply or demand at the opening. So if I can just quickly go to 1 hour to show people what I mean by that. I'm saying this is 6 p.m. That won't work. That's 3 o'clock. Ugh, so thick. Oh, because I did that for you guys earlier on. Right, so that's the first red dotted line there. That's 3 p.m. That's the London session. Open with a strong demand, but then markets took it out anyways on the 1 hour time frame. I'm gonna skip a lot of days in between. I'm just looking for for like really big key moments in price. Price opened here 2 days later, 9 a.m. London session, and then went straight into that demand, right? For intraday traders, this is important because those are the trades you're taking. And so you'd have bought in there a pending order right there. It would have been triggered at the opening of the Asian market at midnight. Markets gap into the upside, right? And then closing at a supply, which obviously would be your take profit. Bearing in mind, that's 9 a.m. when price opened. Hope you guys are following. I know I'm just flying through the stuff, but you know, if you come to our London sessions, we do this every day, every morning during the week. The double bottom-ish bullish engulfing pattern, which created a new demand on the 1st of March, right? And then markets went up into this supply here on the 1 hour time frame. And that particular turning point took place at the Asian market, right? A close of a session or beginning of a new day, which is beautifully and strong. And markets retested that at 9 a.m. at the London session. So if you were paying attention as an intraday trader, you'd have caught that. And then markets just ripped life out of a new one. Maybe took profits here, right? But remember, just like pound USD, remember I told you about pound USD, markets talk to you. They talk to you all the time. They're like, dude, it's a 1 hour time frame. We can see you got a 1 hour demand. We're going to put a 1 hour bearish engulfing pattern on top of it. What do you think is going to happen? Markets are obviously going to capsize and go to the downside. And so that's what price did. Right. So long story short, now that I've got a couple of these zones drawn, you know, looking at the daily markets, then reacted to this, right? 9 a.m. This here area here, 9 a.m. 9 a.m. ish, I guess. Yeah. Oh, this is the 9. Okay, that's 10 a.m. Right. So markets, there's a 9 a.m. opening here. Markets went up to the higher supply, and that's why they're dropping, right? And the question now is, where are they going to open, right? And or rather, the direction of USDCAD. I would say be very careful, right? Markets are really following suit, right, with what they got. As soon as NFP happened, USDCAD, right, they started to fall. There's several demands along the way down, but you really want to catch something that's worthwhile, and you really want to make sure that markets get there. I wouldn't buy here only because your buy is going to be activated in the next 24 hours. And that's never how we trade. We like to wait for price, want price to come to us. I would wait somewhere here if I'm buying, which would happen sometime during the week, just to give price some time to settle and to give you a chance to see the sentiment, right? That's USDCAD. These are short-term trades, by the way, guys. Please don't be confused. I shouldn't even have done all of that. That's not war room material. Those are short-term trades. In the war room, we are very, 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 very much short up until we get there. Those of you who are taking short-term trades, just make sure you know where to get out. But in the war room, we were selling USDCAD. We are selling USDCAD. Right, AUDUSD, and I think that's the last chart for the day. We can just do this one. We don't have to look at NZD because it's kind of like the same. Now, Alvin said it's like USD, AUD is leaving a demand. Yeah. So to take out an opposing area of value, it had to create a demand about, you know, on Monday, you know, just a week ago. But let's just quickly let's look at it nicely. All right. So this was our old sell idea. You remember that 15 minutes chart, blah 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 blah. We made money, blah 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 blah. Right now this is new to me. This is shocking. I must say this. All of this is shocking, right? Thank God my next sell idea is high. That's number one. And I think this is a good example of why we want to be patient, right? Because, you know, this is going to be a dead reason, right? Price is gone, right? So we want to sell it. But let's really break down this chart. Let's actually catch up with the big picture. DXY surprised me because for the last 2 weeks, all I've been doing is focusing on small time frames. You'll be surprised how quick price moves. You'll think, yeah, there's a supply up there at the top. It's so far away. And then out of nowhere, boom, markets have arrived and you are completely unprepared, right? So going back to the source of movement is so important, right? So we've got a situation like this on the presidential chart. Yeah. You know, 2002 to they're not ready, but I tell them every time, 10 years later, markets come back to a demand that created there. Yeah, 2000. Oh, is it 10 years later? No, it's 20 years later. So two 10-year gaps, right? Because it's 2012 and then another 10, 2022, right? Markets will always come back. Markets will always come back home. Always. Smart money never forget. Right. And then since then, markets rallied. Now, the rally, this rally was actually quite impactful because it took off like Euro USD at the time, right? An end of somewhat of a bearish structure. Euro USD was taking a removing 2008 bearish structure, give or take. But let's quickly see what are the top correlations with the Euro USD since we did pound. Just out of kicks and giggles, because I don't remember them all by heart. Here we go. Yeah, I'm physically so tired. Not because of today's war room, by the way. My little boy, kids in school, they come back with their flus. Like I feel like I'm going under the weather, and the amount of work I need to do is so scary. For me, going sick. Right. So Euro USD. So we'll look at the top positive correlations, right? Top positive correlations: USD SG, Euro USD, and Euro JPY. 100%. This is easy to trade. Very, very nice to trade. And then number 4, like before, pound USD, Euro Swiss franc. Nice correlation. I hate anything with Swiss franc, so you don't always see me running there. AUD USD is not even in the top 10. All right, I do know this is a primary market for all risk assets, so it follows. So that's actually quite interesting. That is very much interesting. If you don't mind me experimenting one more time, because we're done anyways for the night, but maybe this information will help you. I just want to see where we are. Where's AUD USD? There we are. So this is Euro USD. Well, there's literally a very minor correlation. I mean, is this correct? This is incredibly interesting. AUD USD, yeah, literally 0.1. Like so what, remember, correlation is not just about direction, right? It means same time, same pace, like no tagging along. So if let me show you what I mean. Let me show you what I mean. Right, so I'm going to pull up Euro USD here, and you're going to see how far ahead the Euro USD is. I'm surprised. I didn't think the gap was this big, right? Basically, I'm going to pull up 3 months chart for Euro USD as well. Remove everything here. Excuse me. I want you guys to see this clearly. Right, so this is Euro USD. This is the 2008 fall, right up there. And then this is AUD USD. So I want you to see why this is a primary market. So you can see at some point in time, this gets caught right in 2020, and something similar here, 2020, right? Price moves up. So this move up in 2020 here for AUD USD is this move up for Euro USD in 2020, right? I think we're together, right? Then I draw a nice trend line from the 2008 crisis, etc., 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 etc. It'll look like something like this. Ooh, that's nice, right? So however you draw your trend lines, it doesn't matter. Now I'm looking at a strong demand in 2020, breaking market structure. I'm looking at a strong demand in 2020, breaking market structure. Good. So that's a good sign, right? So now these things are predominantly the same. The problem is, right, and really not really a problem, but an incredible difference, which you'll start to see and appreciate more so on the governing time frame, is that Euro USD has broken the structure, consolidated, and already dropped and come back. AUD USD is still breaking, still trying to push up or down, and still to come back. Now let's go to governing time frame real quick and come to Euro USD's governing time frame, and you'll see the nuance difference. Now the nuance difference between these two is, as Euro USD was breaking the trend line structure, it broke it in August 2020. Right? Weirdly enough, would have expected the same, but let's see. Yeah, August 2020. Now, when that happened, though, for both assets, this is the important part. Even for pound USD, by the way, this is the most important part. For both assets, I mean pound USD, NZDUSD, all your risk assets, they all created demands on top of the trend line. So when markets come back down, we do a retest and we go back up. Here's the difference now. Why Euro USD is a primary market. It moves first. It been there, done that, created the demand like this, and then came back down like this, all right? Came back down like that, and then Euro USD led the way to the downside. So you can see AUD USD is still looking for a strong supply, still on its journey back down, right? And this is why I'm saying, you know, this is an interesting chart. And you can see, you see COT saying, yo, when it happens, when the drop comes, it's coming. We just need to remove this off the table. We need to get rid of all these hedges. Because remember, look, it's not banks buying AUD, it's hedge funds. Hedge funds are 70% long on AUD, which contributes a lot of positive net positions for AUD as a currency, because it's a commodity trading market, right? Remember, hedge funds will always hedge for two reasons. They own a commodity in that market. They want to protect the price. So they want to keep the price up, right? Because they're still using supply chains as an excuse, COVID, all that stuff. They're trying to make as much money as possible. That's why you hire a hedge fund. You know, apart from being a finance sector, you could be a farmer and you go to a hedge fund to have a position in the financial markets to hedge the price of your crop on the market, because you export maize to Japan or to America. I hope that makes sense, right? So you can see that the net positions, they are very positive for the time being. But banks want to sell the sucker. Banks are tired. They are waiting. And the day that day comes, see, banks been ready. Banks' net positions are negative. They want to bring this thing down. The thing that's slowing us down is we need to wait for hedge funds to hurry up. Now let's look at month to month. Month to month, you can see it's coming. I'm gonna go all the way to January. In January, there were 14,000 positive orders. You know, net. These are sentiment difference. Remember, this is our sentiment indicator, right? The difference between banking net positions and hedge fund net positions, right? And I taught on that. There's a video called Master Traders something, you know, part 1 or whatever. You'll have to just quickly review that to get, you know, the gist of the spreadsheet, right? Where was I? Where did I get the 14,000? Because that doesn't look like January now. Or maybe it was one of the Januaries. All right, so it was the end of January. It was already on 14,000. Right, let's move on. February, it went up to 16,000. And then the 8th of February dropped to 12. 15th February, it dropped to 10. 22 went up a little bit to about 11. But watch banks' commitment to sale, completely unshaken, right? 82, 18, almost 90% short. Hedge funds 72% long. And then now March, we're on 9. So I would say watch out in the second financial quarter. I'm not saying it's going to take that long, but I'm definitely saying you need the sell orders to combat all these strong hedge buy positions. And when that happens, this thing is going to follow suit like a little bird. Now, if I know AUD, USD, or I understand my multiple time frame analysis, I have to wait for the striking moments in price. I have to wait for where price is most imbalanced. Right now, markets are playing at very balanced levels. So this area here might be a good place to potentially wait. I already have a sell set up on the daily time frame, and I like it. But maybe it might be well worth, you know, revisiting, because the only time I can see markets almost in a rush to fall, like Euro USD, is after a green. Now this, okay, maybe it's a bit tricky, man, isn't it? Right. So this would be nice. This would be more ideal. I would trust this more, but this would mean we need 4 more weeks of COT, or we need that 9,000 to become 5,000, blah, 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 blah. Until then, this is at play long term. And I think this is realistic, to be honest with you, right? You could get cowboy swing traders who want to play this game. And this game is dangerous. And that's where I think we all are right now. If I go normal candlesticks, I think we are all waiting for this. You see this area where I said it's dangerous? This is the supply that we're all targeting. Well, let's find out. Yeah, markets have almost arrived. Right. So this is the supply we're targeting. And I say it's dangerous because, you know, the strength of the buys, this strength here, the net positions and the history of all these buy orders. There used to be 11. They're only 9 now, right? 22,000 take profits have happened. The strength of these buys are quite strong. And so you're meeting this particular area, let's say 25 October 2021. Let's see, does my COT go that back? Yeah, it does. It goes all the way to September. So 25 October. I just want to see September, October, 25 October, 25 October. So somewhere in here, where you had less buys at the time, a whole lot of negative sells, longs were not that big, right? So you've got, it could hold, it really could hold. You've got a couple of orders that have been operational since then, obviously. So I was hoping for a bigger sell orders to see how much money is now left in here, because this order block was made in the week of the 25th of September, right there. Right, strong imbalance to the downside, deserves to be retested and pushed down. I just don't know if it's going to be strong enough to hold the arrow that's facing price, right? But that's kind of like where we are right now. We are all, well, not we, let me say me. We are waiting for markets to kind of like react to a couple of demands. If you see my actual AUD USD trade setup, it looks something like this, right? So I'm here. I want to sell here. So let's call this. Geez, my charts are such a big mess. I'm going to move the white line. I don't want to take this trade because that's kind of like where markets are now, right? Markets could close, could start selling there, right? There's nothing wrong with that, especially if they make contact with the trend line. But I'd prefer a trend line touch up here. That's what I would prefer personally. I'd prefer a trend line touch up here, but markets are so parabolic, right? And like Alvin said, look at this. Now they're just making demands along the way. So now on the daily to daily, right, our risk to reward is now being messed up. And our commitment to price has now been tested, literally been tested. Because if you're selling here, and it's your choice, it's your cowboy account, you have to know how far you're going to hold and where you're going to get off, right? For me, this is 10 times better. And even that is no longer going to give me the type of money I wanted, because how much of a big area do I have to hold, right? It's very tricky. It's honestly very tricky right now. AUDUSD has to drop, but hedge funds need to move out of the way. They have to get all their money, right? And it's all based on future contracts. Basically, this is how the futures market works. When those contracts expire, and remember, I showed you guys where you get all that information. I think I did. If not, I'll do a proper video. But COT legacy, right? Futures. This is where I get my Bitcoin stuff and blah 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 and all that stuff, right? All of here, and then you come to COT reports. So that we're out of time, guys. But just play around on this website. I can put it in the description box, right? You'll see here currencies, stocks, futures market, energies, etc. Right? And it just goes on and on and on and on. There are a lot of things. DXY, everything is there. Everything is there. And you'll see that, look, man, hedge funds are still quite invested in pushing this thing up, but banks want to sell immediately, as soon as possible, right? So for me, take it with a pinch of salt. Very good supply-ish. Yeah, ne? It's not even recognized. Yeah, so very low risk here, and as soon as you can break even. Scale down to H4 for more clarity, because you really want to take the trade closest to your stop loss, which translates to selling high, but also risking less, right? So you want something that looks like this. If you're going to take this trade, you want something that absolutely looks like this. And I should really adjust all my pending orders for something up there, right? And ignore this stuff here. Right, so good luck there on AUDUSD. It is bullish, and I hope you understand why. Look at this. Look at your H4 just before markets close on Friday, right? I mean, only cowboys would take this. And cowboys, remember, don't forget the case of pound USD, where I said markets are going to break through that supply, and markets did not break through that supply. So if you're one of those people who are like, Leroy said, and then I could have made money, but I didn't, then yeah, cowboy trade, try there. I'm not a cowboy. Guys, I appreciate you, man. You should see how dark the office is. It's been an absolute blast. I know I did all the charts that I wanted to do today. I will follow up with another war room, this time just flying through markets so that we've got a good structure on things. Those of you who took profit on gold, you made a smart decision. It was time to take profits. Those of you who locked profits and are still holding, this area of value is next, right? But don't forget the yellow, you will start to see a massive drop. Remember, if dollar starts to fall, even more incentive for gold to rally to the upside, right? Safe havens, right? Basic maths. Guys, thank you so much. I hope you guys learned something. I hope you enjoyed this. See you tomorrow. Tomorrow, though, please understand this. Tomorrow we have 9 a.m. London market open session every day. That's coming up. God willing, I get up and shift my time again. So I'll be meditating from about 5 a.m. ish. So earlier than the London session, I will have your podcast done by then. If not, then the podcast will be at night. If I miss the mornings because I needed more time for me in my meditation practice, then I'll do the podcast at night like I used to, right? But podcast is back this week. London session, 9 a.m. I'll see you around, and then watch out for the pre-recorded videos around other things you need to learn about markets. But I will do a better review of other assets. I hope this has been beneficial. Wealthy in 3 years program, please keep that cash, right? The financial notes, I'm already almost halfway through. It's coming. Don't spend that money on KFC. Buy crypto. I'm going to tell you where to go. I'm going to tell you what to buy. It's what I'm buying. You're going to take it as education. Then you're going to make your own decision for your own portfolio, right? So check that out. Good night, everybody. God bless you. If you haven't liked the video, please do like. I'd appreciate that. If you enjoyed it, that is. Cheers, guys. Good night. I know there's like a 10-second lag. So pleasure, Mr. Titus. Pleasure, buddy. And Titus, welcome to the Wealthy in 3 Years Club. I saw you on the list. You're one of the newest people there. Good night. Right, I've written it all out. Good night.